Ahmad sir awaaz kiti કરે છે મને કે ને અહીં તો અવાજ છે 60% અહીં તો અવાજ છે અહીં તો 60% છે જ પણ અવાજ બર જ છે અંદર અમે પેલું તમે સ્ટાર્ટ કર્યું હતું ને એમનું સ્લો એ કેમ થયો હતો સ્ટાર્ટ તો તે મેં બંધ થઈ ગયું મેં કશું નહીં કર્યું એવો અવાજ કેમ
It is much more than that. Even senior citizens, we have a specialized group for senior citizens. So walking, running, cycling group for them. We have Thursdays and Tuesdays specifically for senior citizens. So they, they'll be getting a specialized exercises done virtually and maybe when things normalize even physically. So this entire program is structured around that. We all get used to fitness. You are used to actually getting up and walking. And also we'll be having a lot of sessions like motivational sessions, inspirational talks. Doctor will be coming and addressing us, nutrition talks. So all these things will be a part of this movement, and we are getting a very good response. In case you have any feedback, any suggestions, please let us know. And yes, do register for it at the earliest. And by next week, maybe on Tuesday or Wednesday, we'll be starting the BCA test. So that is, as we said, is a body composition test. So the members, those who have registered, they can come to branch at the allotted time, and then they can get the test done. Immediately after the test, we'll be having a fitness test also with that. And then there'll be experts who will be sitting and making an entire personalized workout card for them for the entire week. So this is a very personalized exercise that you want to do. We'll be giving you contact numbers of a few people who are in this industry so that you can contact them in case of any need. So it is a very well planned manner, and we'll be having a lot of interaction even during the movement. And as far as the walking and cycling groups are concerned, I think it will be something which you have to join as a passion. If you want to, walk or jog or run, whatever, you can join that groups, and there will be team leaders who will be able to guide you of how to do, your daily routine and all. So in short, an excellent fitness initiative. The entire team has really worked very hard behind it, and we have been, I think, we've been almost a month, which we all have been working on this, and I request all of you to participate in large numbers because, and I'm very happy also to share that all the 11 branches of Gujarat, they have joined us in this initiative. So it's something which, as a Gujarati, can see the movement that we are taking forward for the health. So please do join for this. And apart from this, we are keeping a lot of technical sessions. Some after the bank audit, we have planned on the GST. On 23rd, we are having a internal audit in the GST, a very different topic that Vishen Bhai has coined. And I think I'm sure it's going to be a very good learning session. Puneet Agarwal from Delhi is going to take the session. And we are also coming up with a series on trust, an entire technical series on trust, wherein I think Sunil Bhai and I, we are working hard on that we have entire basics of trust till the entire like formation, income tax aspect, charity commission, entire thing covered in entire 7 or 8 days of package. So the trust workshop we are coming up with. Then FEMA and international taxation, again a very, very good area of practice. So Manisha, when we are working on that, we'll be having an entire new series on the FEMA as well as the international taxation. So these all events are in the pipeline. Maybe once the things get a little normal, we can have physical as well as virtual. But with this going around, I think we all should also together work on the fitness as well. So with this, I would once again thank today's speaker, Chintan Bhai first. I think he agreed to speak for half an hour. I really told him that we want your address, sir. So he's going to talk on the amendment rules, account amendment rules that have come up. And also special thanks to Sunil Bhai for arranging the session on trust. Thank you once again. Thank you.
Thank you, Chairman, for updating us about the Moment 73. I think let's get all started and bring a lifestyle change in our lives. And I would now request CA Vishen Shah to introduce the first faculty for today, CA Chintan Patel.
Thank you, Anjali ma'am. Chairman of the branch, CA Harit Dhariwal, learned faculty of today's session, Regional Council member, CA Chintan Patel, Secretary of the branch, CA Anjali Choksi, Dr. IP, CA Anjali Choksi, and the Treasurer of the branch, CA Sunil Sanghviji, members present here. Yes, it's a difficult task when I have to introduce, when the person is not required any introduction. Our Regional Council member, CA Chintan Patel, for this subject, I can share the one incident that in the afternoon we closed the registration of the today's event, and someone called me and said, Vishen bhai, wo Chintan bhai wale program mein registration karwana hai. So this is the brand, Chintan Patel for Ahmedabad branch, and we all are proud of you, sir. He is partner of NJP and company and serving members since decade. So we welcome you, sir. I request all to give a big round of applause to Chintan bhai, and now I request chairman of the branch to felicitate our regional council member, CA Chintan Patel, with the moment. Before starting his session, now I request I request CA Sunil Sanghvi to introduce today's next speaker.
Thank you, Vishen bhai. Chairman, CA Harit Dhariwal, Vice Chairman, CA Vishen Shah, Secretary, CA Anjali Choksi, RCM, our beloved RCM and faculty, CA Chintan Patel, members present over here, and invisible participants, the virtual participants. The second faculty after the Chintan Bhai, that is a Padmashree Crasto, Madam Padmashree Crasto. She is a partner with audit and assurance practice at MSKB and Associates LLP in Mumbai. She operates out at a Mumbai office and has over 16 years of extensive experience in practicing audit services across industry verticals of insurance, financial services, and manufacturing. She is in charge of keeping an audit team well informed of the latest technical developments in various statutes and regulations, preparation of the certain publications for internal as well as the external use. She also does the standardization of various reports, templates, work papers for the purpose of audit. She is also responsible for the quality assurance function in the audit and assurance services, which technical includes review of deliverables, conduct of online review, cold review of audit files, and thereby managing firm breaks. She imparts training programs on technical, quality, methodology, APT, and other matters of professional interest. She is also contributed to the WIRC publication, analysis on KM and other operating reports, matters, model financial statements or non-corporate entities. With this brief introduction, we all welcome you, madam. And now I would request Chintan to start the session.
Heartiest congratulations to the EC committee of Ahmedabad branch, because the full EC, entire EC is here. And chairman, the dynamic chairman, Harit, vice chairman, vice secretary, Anjali, Sunil Bhai, Rizal. It's really proud to have the entire EC and ensuring that each and every member, student of the branch is being satisfied with the work. Last year was really a tough year for all of us, where COVID we have faced and many lives have lost. And a lot of CAs are also lost during this. So when this was the phase, and now in the next year, in this year also, the same thing happened. The first thing which chairman has taken as the task to do is to ensure the fitness of each and every member should be such that no life fatality should happen. It's not only about the members, but the whole family members of the members plus students. They all should be invited for 73 fitness challenge. Fantastic task, chairman, for ensuring that the life of family members of student members are intact, should be intact. Now let us come back to and look at today's session. It was really a surprise, pleasure to have these kind of sessions at this date, because on 24th March 2021, Minister of Corporate Affairs has given 2 bouncers, actually 3 bouncers. First bouncer, which was referred to accounting, where it says that audit trail. The audit trail should be mandatory for every company which uses the accounting software. Then second bouncer comes, it says that auditor has to ensure that audit trail is perfect as it is defined. And then third bouncer on the same day, it says that Schedule 3 amendments. And when I look at the Schedule 3 amendment, I feel there will be 1 or 2 lines, 3 lines, but the pages goes on and on. And there are a series of Schedule 3 changes have been done. This is fine, which were all on 24th March. And then the first look comes to from which date it is effective. So we look at the notification, we found that it is effective from 1st April 2021. So we again feel, wow, relax. It is from 1st April 2021. Then further reading, further questions come into mind, which questions are still unanswered. That is it effective from which period? Because with effect from 1st April 2021 is okay. But when talking about for which financial year, is it applicable for the financial year 2020-21 or 2021-22? When the notification says so, I'm going to first talk about the applicability, because I know that is the question for each and every one of us. This is something which requires a lot of debate, because if it is going to be effective for 21-22, then I think we all have to go back and we have to do a lot of hard work to see that we are able to apply with that. Right? So first thing, it says that it should come into force from 1st April 2021. Now, then comes the signing date of the financial statements is after 1st April 2021. Signing date of the auditors is after 1st April 2021. When the signing date is after 1st April 2021, and the date on which I'm signing, am I supposed to see that everything is compliant with it? The technical or principal answers may be yes, Because if I signed on 10th September 2021, then anything which is effective from 1st April, I have to ensure, because there is no mention that it is effective from which year. If it has been mentioned, it is effective from the year, I'm sure. But if it is something providing notes and disclosures, I may be required to look upon the disclosure requirements under these particular things. So these are the few things. I will also talk about everybody once more. But again, recently on 1st April 2021, the MCS again issued another amendment, and they have deferred audit trail provisions by 1 year. So when they deferred audit trail provisions by 1 year, in that particular period, they mentioned that for the financial year beginning from 1st April 2022. So in that particular thing, they mentioned now after so much of hue and cries, they understand there is an issue about the period. When they issue announcement, they never thought about the signing date. They issue the announcement because now government feels that they know everything. There is no need to talk about the ICAI, ICSI or any professional bodies. So they issue announcement, but there was no thought process was going beyond without how it's going to impact the auditors or financial statements. Because when we look at financials, we have clear first question was applicability, but that was not in the mind of the government. Government thought this possible 2021 event is over, but signing date was not the question on that. So in the amendment which was issued on 1st April 2021, they made it clear that audit trail has been deferred by 1 year and is going to be applicable for the financial year commencing on or after 1st April 2022. So the audit trail is very clear that it is being deferred. Now, what about the other provisions? A lot of debates have been done, and we also internally discussed in ICAI at various forums. Whether at ICAI Delhi, there was a session a day before, there was a session at WIRC of ICAI on that things. We have internal discussions at various forums, and it is like it is in general consensus of everybody that it is going to be effective from the financial year 2021-22, next year. But however, the notifications are technically not correct. So we need to really wait for the some clarifications from MCA. Now there can be questions that what should be done by the companies who are going to publish results within this few days, because there are a lot of companies like Infosys, Reliance, they publish on 10th, 12th of April. Now, see, look at the kind of adjustment done in Schedule 3. If we expect the Infosys or Reliance to follow this within 3 days, within 4 days, and then we expect the auditors to review it, and then they are supposed to publish in, that is not something possible. So I think in my view, what can be done that somebody, till the time the government has issued clarification, technically there is always issue. So it is always advisable for the management to write a note in a notes on accounts about these amendments and why they have not done these changes, because of their understanding that it is going to be effective from the 1st April 2021, year after. So I think that kind of note, if it has been displayed in the notes on accounts, it will be really useful for the stakeholders. But I'm really sure that MCA is going to give this clarification very soon. There has been a lot of holidays in between. But yeah, see, holidays, I understand holidays are there, but if they want to issue announcement, it issues very fast. Whether it's Sunday, 10 o'clock in the night or 12 o'clock in the night. But yes, for these days, holidays are there. So let's hope that once holidays are there, working days started, we expect to have some clarification from MCA. So we are able to know that from which particular period it should be effective. But this juncture, the consensus within the ICAI in general, I'm not saying on official, but yes, in general, expert is such that it's applicable from the financial year 2021-22. Now, with this brief, let us look at basically next point. Companies Accounts Amendments Rules 2021. First thing is that I'm just focusing on just brief points on this point. I know it's been deferred by 1 year, but just to address upon this few issues which can be emerged from here. It says that audit trail should be done. Recording of audit trail of each and every transactions should be done. Creating an edit log of each change made in the books of accounts along with the date when such changes are made. And then there are a mention about, I think there is some issues in presentations in iPad is not being properly reflected, but just ask him, then we'll come. Okay, so let us look at what these clauses talk about. It says that if any company is using accounting software for maintenance of books of accounts, so in case if any company is preparing accounts manually, then this is not applicable. So if any company is preparing books of accounts by using accounting software, what they want that the accounting software should have audit trail. Now, audit trail, why? I think that is this is a very good. If you look at it from transparency point of view, from the clarity point of view, from the way the account should be done, I think that's a very good suggestion where they want to ensure that the truth should come out. Because there are many ways where the stock has been prepared, or there are few things that the stock has been increased, decreased. When it has been sent to the bank, it has been different figures. Then on the other side, it's different figures. So there are a lot of things that are happening here and there. So just to understand what is the truth and reality behind that, what is being done is that you have to ensure that audit trail should be there. Now, this is the provision which is a standard across the world. If you have heard about many cloud-based accounting software like QuickBooks, Zoho, and others, they already have this feature, and that is something available. If you ask QuickBooks and Zoho, okay, nahi, aap aisa karo audit trail nikal do, and then you give me the software, they say no. This is something which is required. This is must. We cannot remove that. So basically, this display, if possible. Okay. So basically, if so that means now it's very clear that you have to ensure that whatever way, the way the accounting is done, every piece of information should be recorded. Now, audit trail means what? The time, date, and the amount, entry, everything when it is done. If it is changed, what was the original date time? What is the original amount? When it is changed, what is the updated one? If it is changed third time, fourth time, fifth time, date, time, amount, everything. So everything need to be captured in such a fashion that the government, regulatory authority, wherever they want information, they can see and look at and understand and analyze the information that is required. So that is audit trail, and that audit trail is compulsory. So the purpose of government giving deferment was that there are many accounting software in India where the demand was such that the software should not have audit trail. Earlier, if you want to give मुझे software sell करना India में, so people will ask audit trail नहीं है ना. Now that is the reason why the accounting software didn't have that feature. Now it is compulsory, so they need some time to upgrade the softwares. That is the objective why the MCA deferred for by 1 year, just to give a time to the accounting software companies so that they are able to have these features there. So with this, I think that's good to have that audit trail feature has been deferred by 1 year, but that makes a very, very critical, clear point for each one of us that please ensure that the accounting which is done accurately. And even if we look at the Schedule 3 changes, when she is going to discuss about Schedule 3 changes, you realize that a lot of changes are being done just to ensure the compliance with laws and regulations perfect. Funds movements are being accurately, any secure movements are being captured, and the stakeholders need to be disclosed information which is required. So a lot of information have been changed. I think when she talks about, when Padmashree will talk about this Schedule 3, you will realize the aging analysis which is required. This all will provide a lot of information about the financials, which are generally window dressed in financial statements. Now everything is going to be come out. Now let us look at the second very important point about the accounts, where in Board of Directors report, it says that following information is to be disclosed. One is that the details of application made or any proceedings pending under IBC. I think if any IBC proceeding is pending, that is to be mentioned, nothing more than that. Third point is that the details of difference between amount of valuation done at the time of one-time settlement and the valuation done while taking loan. See, the points which are being written here, I must say these are the points which have been practically gathered from various sources, from banks, industries, chartered accountants, professionals, how the manipulation is done, how the window dressing is done. And after studying everything, they have done changes. I think that's fantastic. I must say that the kind of information they are asking will definitely mean to see that a lot of disclosure transfers will happen in the financial accounts. Now here what it says that when you want to take a loan, you're given a valuation report. So generally for that purpose of taking a loan, you will give valuation report high. And when you want to do one-time settlement, you will try to have valuation lower. So if that is situation, then you need to please provide information about the two different valuations if it is done that you do provide in board of directors report. Now coming to the next point in the auditor's report. In auditor's report, what they have done, I think there are two changes with respect to changes from. Okay. Thank you so much. Okay. Perfect. Next, can you do it? New. Yeah. I think yes, fine. So now we are going to discuss about the company's auditors rules. And the company's auditors rules, clause D has been omitted. Clause D is with respect to SBN, specified banking note. I think the demerits who are the time SBN was there. Now it is no more required, so that is being removed perfectly fine. Next point which is added here is that about now this is a very critical, very important things. I think we need to just go through it. I'm sure that Padmashree, when we discuss about Schedule 3 amendment, she will discuss about this point. But just I'm taking 1 minute to discuss this point. It is with respect to the Schedule 3 matter. Schedule 3 amendment, where it says that whether the management has represented that to the best of its knowledge and belief, other than as disclosed in the notes on accounts. So there is a disclosure recommended in notes on accounts about Schedule 3 amendments. What no funds have been advanced or loaned or invested, either from borrowed fund or share premium or any source of or kind of fund. Now, when you look at the heading of this particular point in Schedule 3 amendments, it talks about the heading there, borrowed funds or share premium. But I think it talks about all funds. It talks about all funds. We said either borrowed funds or share premium or any other source or kind of funds. So the focus here is that if any fund has been invested in other company for third company, or any fund which is received for another company. So it is called circular of the fund. If I want to give a loan or fund to Manisha Band, I may give money to Shweta with the understanding writing that Shweta will give to Manisha Band. Or I have received fund for Manisha Band with the understanding that I will give fund to Shweta. So what will happen that is kind of circular where, so these kind of things will happen that Schedule 3 requires you to disclose. And under auditor's report, it requires that you need to see, as an auditor, you need to check and see the disclosure which is made by the notes of accounts is complete. And do you have reason to believe that any other funds which are not disclosed are also there? Is there any other such transactions there which are not disclosed by schedule by the company notes of accounts that need to disclose here?
Round tripping?
Round tripping, yes. Where circular funding is done. Okay, so this is like on both way. One is fund being advanced or loan. Second is on the fund which is received by the company. And the last point, if you look at the responsibility of auditors, is very, very high. It is not only about just looking at the MRL of the company, but in addition to MRL of the company, in addition to the notes account which is there in the schedule in the notes accounts, but also has to look at the whether based on such audit procedure that the auditor has considered reasonable and appropriate in the circumstances stating nothing has come to their notice that has caused them to believe that the representations under subclause 1 and 2 contain any material misstatement. So at the end, I have to have audit procedures to believe and ensure that the disclosure which is done is perfectly fine. So there is responsibility cast upon the management to disclose, and also there is responsibility cast upon the auditor to cross-verify, cross-check, and then to confirm that nothing is materially misstated. Next, 2 points are, one is on whether the dividend is declared and paid as per section 122 compliance or not. And then last point is on audit trail. Now here, when they change the clause G, they mentioned that whether the company is in respect of financial year commencing on or after 1st in 2022. So these particular word sentence has been added in the clause G itself. And if you look at the heading of the notification, it says that effective from 1st April 2021. So everything is effective from 1st April 2021. But for clause G, they mention about year. Now, if you look at earlier clause G, it said whether the company. There was no mention of financial year. But later on, they realized the importance of the year and the date. So then they made the clear words that whether the company in respect of financial years commencing on or after 1st April 2022 has used such accounting software for maintaining books of accounts, which has feature of recording audit trail. 2, whether the same has been operated throughout the year for all transactions. And third, the audit trail feature has not been tampered with. See, again, this is critical. Not been tampered with. As a CA, how can I know that is it tempered or not tempered? Whether the government wants me to hire IT consultant to understand and confirm that it is not tempered with. So I think this is very critical and very difficult things to certify on this aspect. And whether the audit trail has been preserved for the minimum year which is required. So I think these are the processes for audit trail, which is already been deferred by 1 year. So I think I'm not taking much time. It's already 4:05. Padmashree may have joined here, and she has already been she has a very vast experience on dealing with these matters. This is one of the very, very important part. This is very, very important part. Schedule 3 amendment for all of us. And again, I am thankful to each one of you who are present here physically. In COVID-19, as you come here and ensure that we do discussion. I think this topic is something which requires presence, because this is like learning from scratch, learning something new. But I don't know how it's possible in this area. But still, a credit goes to all of you to really listen technically, virtually, or coming in person. So now I give a charge to Padmashree. What do you think, Pachika?
Hello, good evening.
Yeah, see, Padmashree, we welcome you to this the branch of ICAI. Can you please start your session? Your brief introduction was already done by the committee member.
Sure. Can I be allowed to present my screen?
Yeah,
good evening to everyone.
Yeah, please go on. Yeah, it's okay.
Can you see the screen? Can you confirm, please?
Yeah, we can see the screen.
Yeah, sure. Thank you for providing the opportunity. And thanks a lot for coordinating. So we are at the cusp of the end of the year, and we are starting a new year and the new year of reporting. However, at the last minute, we have so many obligations to report certain things, which I think has been discussed just now in detail. So what I'm going to run you through is the amendments in the Schedule 3. Before I start off, just would like to kind of tell you that how has this presentation been structured. So what I have done is kind of pulled out each and every changes, though it is larger or smaller, and have put few points or questions that came to my mind when I was, preparing this PPT, and when I was thinking about what are the things that may come as a question, or what may be the hurdles. So I have put off certain questions. There are obviously many more questions. These are prima facie first round of questions that came to my mind, and whatever additional questions that we all think of, I think practically when we start putting into practice, there will be much more questions, so on and so forth. So we'll keep working towards us, and it has to get evolved over a period of time. So let's look at the amendment. Amendment is about three. As we know, there is Division 1, Division 2, and Division 3 of Schedule 3. Division 1 is Indian Standards of Auditing, Indian Standards of Accounting, which we call as IGAP, or the accounting standards. Then the next one is Ind AS, that we all know for all types of companies. And the third category is Ind AS for NBFC. So what I have tried to do here in the presentation, and the way the flow is set is, so basically when I started preparing for this, the first thing that came to my mind is, oh my God, it's 44 pages, so much to read. But then when I was through with 18-19 pages, I understood that 18-19 pages of Division 1 is something that is getting repeated into Division 2 and Division 3. So the approach that I have followed here is basically explained everything threadbare in Division 1, and then only the incremental portion in Division 2 and Division 3. So all that is there in Division 1 applies to Division 2. All that is plus some more things. All that is there in Division 1 plus Division 2 applies to Division 3 plus one or two more things. That's how it is, and that's the way the flow is also set. So let's look at the detailed Division 1 requirements. What I have, yeah. So the first and the foremost thing that we have is the compulsory rounding off. Earlier, it was not compulsory rounding off. Now the word may is substituted by shall, and it has become compulsory rounding off of figures based on the total income. So it was earlier turnover. Now it is total income. So anyone who has any company which has a total income less than 100 crores, it has to be rounded off to nearest 100,000 lakhs or millions. Total income more than 100 crores, nearest lakhs, millions or crores. They have to round off. Earlier it was optional. Now there is another sentence written there that once it is selected, it should apply the unit of measurement consistently. So once we select, then we have to apply it year on year consistently. Two important questions that come up to our mind. One is, what is definition of total income? We all know about income tax and other taxes where income is defined. However, nowhere in the Companies Act I could trace out any definition for total income as such. Everywhere it is defined as turnover and other things. So maybe we are awaiting a definition of total income, or what is to be considered under total income here. So couldn't find anything to that. So that's the first and the foremost question, because that determines various things in the financials. So that's a very important term, and that's most critical to know how it's flowing. So it will be necessary to understand what's total income and what's the idea behind total income instead of turnover as such. The next thing is on the face of the balance sheet. We already had this, and as a practice, we all used to follow this. We have property, plant and equipment. That's how it is called in IGAP also now, and in the Ind AS obviously. And we always had a separate line item for intangible assets, though in the Schedule 3 balance sheet, some people used to show it on the face of the balance sheet, some people used to show it in the the schedule. Now the ambiguity is gone, because as per the accounting standards, you are supposed to show it separately from the tangible assets. Now the heading tangible assets, which we used to use, is actually gone by, and now it is replaced with property, plant and equipment. This was practically being done by all of us, but I think they have now made it officially also changed it to property, plant and equipment and intangible assets, and have added a subheading of intangible assets and scored out the tangible assets part. Let's come to share capital. In share capital, we already know that there are, after introduction of Schedule 3, there were elaborate disclosures that were required, and there were lots and lots of things that was there. And now there is nothing, and now there is additional thing. In addition to it, now there is additional table that we have to present. What is the additional table that we have to present? It is in the form of the following things. That is the shareholding of the promoters, the way you used to do in the public company, you know, the SEBI requirement, the way you used to present there of shareholding pattern of the promoters. That's how we need to now put it on in a tabular format here in all companies as well. And what are the requirements? The requirement is the name of the promoter, the number of shares. So if there are different classes of shares, you need to separately put out for each class of shares, and then the percentage of total shares. So if you have say different class of shares, let's take preference equity. So if you have 1000 shares in preference, and then how much is the promoter holding, so the percentage you will have to give out of the total. So out of the 1000, if he is holding 300, then you have to say 300, and then accordingly the percentage will have to be taken, and that also has to be put. And then the percentage change during the year is also to be put in. So that has to be computed with respect to the number at the beginning of the year, and if there is acquisition during the year, then accordingly you will have to call out the percentage change, and then you will have to present that also. Just for reference, I have tried to jot down the new the definition of promoters also under section 2 subsection 69 of Companies Act. So as we all know, promoter means who has been named in the prospectus as a promoter or identified in the annual report as a promoter. So you will see certain companies as promoter group companies or promoters, which is actually being called promoters. Then the second thing is who has control over the affairs of the company directly or indirectly, whether as a shareholder, director or controller otherwise. And third is most important, without any name, based on certain shareholder agreement or otherwise, he is the one who is guiding and directing the entire board of directors, and the company is acting in accordance with that. So that's how the promoter definition stands, and that's quite wide in terms of its coverage. So any day shareholding and any changes by the promoter group is something that is necessary to be disclosed now by all companies. Next change is, this is a minor change, the current maturities of long-term borrowings. This has to be separately disclosed under short-term borrowings. Now, as a practice, this was being disclosed. However, this is now mandatory. That's the only change. Certain things actually based on practice, it has evolved that where to change, where to disclose, how to disclose. We have been doing it, but now it has become mandatory to disclose such things. Just a second. Sorry. The next biggest change, I would call this as a biggest change because it is indeed a very big change in terms of the things that it will require and the amount of time and effort that it will require. The insertion of subheading trade payables due for payment and the aging schedule which is required. So under trade payables, there's a subheading which calls as trade payables due for payment, and then this schedule has to be, aging schedule has to be presented. Now we have this, first of all, the classification is MSME and others, and then disputed MSME and disputed others, like payable to MSME, payable to MSME which is disputed, and payable to others, and payable which is disputed. So it's normal payable and disputed payable. And then outstanding, you will have to put out the bucketing there. You have to ensure that the system, I think in larger companies or in to maintain to manage the volume, this is what you will have to do, is that the system will have to be put in place to give you the bucketing of this. As what's less than 1 year, what's more 1 to 2 years, what's more than 3 years, what's 2 to 3 years. So this kind of bucketing has to be done. Now, first of all, few things that come to our mind. Due date for payment. So when the first time the schedule 3 had come into picture, what has happened is that it was for debtors, that is trade receivables, and there things were under our control, and then many of the standardizations has happened in terms of the payment date and other things were in our control, and then the companies had made it standard for most of the customers, and the due date for receipt was duly mentioned, and then it was easy to call out that from the system, because there also it required some amount of system categorization itself. Now here things are so your suppliers, most of the suppliers, the company is not in a position. I'm just especially talking about mid and smaller businesses. Larger businesses still have very fixed conditions, very fixed terms. They can actually rule the suppliers also, but I'm talking about mid and small businesses, wherein they don't have much say in the trade payable, due for payment and other things. They will have to accept certain things as is, or based on business exigencies they manage their payables as and when possible. So there they have to ensure that there has to be a field or some noting, or somehow it has to be there that the due date of payment is mentioned. So this has to be sitting on the third day of April, and right now we have to educate our clients to tell them, because later on pulling out the bills, because if there are contracts, if there are larger suppliers, if there are contracts, then it is possible to look at those contracts and call out the periods and things like that. But if there are no contracts, then it is difficult to look at each bill and decide what is the due date for payment. So today we are sitting on the third day of April. We need to educate our client and tell them that this is something that you have to you are required to do for the whole of the year, and you start right now. So if this is not started today, maybe after 3 months they are in complete soup, and we as auditors will have different will have difficult view difficult time in collating those details or getting those details. So that's the amount of work that is required here. And then it's also mentioned as a footnote that if due date of payment is not specifically mentioned, then it is the date of the transaction. So I think for the smaller bills and things like that, that is what is someone is going to do. They are going to pick up the due date of the payment as the date of the transaction itself. And then the way unbilled receivables used to be shown, you have to actually now classify the unbilled dues separately, and that has to be appropriately shown. So the questions that we already discussed are some things that I have put up over here. Necessary to determine due date of payment. So earlier the better. We have to start now, and we have to tell the clients that this is something that you are going to do, because you will need this information for preparation of your financial statement at the end of the year. And if you don't do this, you will be really in trouble, and we will not be able to report on it. And then if no date of payment is specified, then we have to take it as the date of the transaction. Unbilled, whether it will include certain estimations or provisions. So this point is something that is relevant, that I thought we should discuss, because many of the companies do have this monthly booking of expenses and then reversal at the beginning of the period. So we all know that there are TDS and other issues that are involved here, and time and again we are looking at those things specifically, and we give some caveats in our 3CD reporting, that is tax audit reporting also, that this company has this practice and it is not identified to the party, and it is for the MIS purposes that they are preparing, and all that stuff. Now out of that, if there are specific provisions that are made against certain parties, then whether that will also amount to this, or how do we manage that, that will be a question. Larger estimates or the larger provisions is something that I'm talking about. The bucketing system, that is less than 1 year, 1 to 2 years, 2 to 3 years, and whatever is required envisaged by the Schedule 3. I think there is a system tweak that will be required if the volume of transactions are higher, or it has to be set in a manner that it gives out those reports, and then testing the authenticity of those reports, ensuring that they are generated in time, and all that also requires good amount of time and effort. Another question that comes to our mind is, how about time bar debt? So if a simple point is to be discussed in terms of receivable, we will always ask what's the recoverability of the amount, whether you have made adequate provision, whether there are supporting for the provision and things like that. But in case of payment, what happens is, if it is old, then we start asking, and then we look at all the documentation and things like that, the completeness of provision. But many a times the client is of the view that the person has not asked why I should pay. This is a common argument that we enter into with the client time and again. So what happens for a time bar debt? Will it be as part of this schedule, whether we have to give additional new note? Those things, I think it will not be as part of the I would say the amendment, but I think these practices will evolve over a period of time. I think trade payables is an area. which will actually involve significant time and effort. The way when Schedule 3 had been introduced, and the first cycle, trade receivables had taken quite a bit of time, and it took a year or two to settle down as to whether things are going properly or otherwise, or there are some other hiccups or issues that the companies are having. Next is other current liabilities. The subheading current maturities of long-term debt is omitted from here because it is included in the short-term borrowing. So it's gone from here and it is reflected there. The next important change is all our favorite areas, which is property, plant and equipment, and intangible. So the gray portion was something that was already there, that is reconciliation of gross and net carrying amounts of each class of asset at the beginning of the period, and showing addition, disposal, acquisition through business combination. Now the portion, the red, is something that is newly introduced, which says that amount of change due to revaluation. So if you have done a revaluation, then the amount of change due to revaluation is something that has to be brought out very specifically. And if change is more than 10% or more, then the net carrying value of each property plant, the related depreciation and all those disclosures will have to be separately done. So basically we have to do a calculation of, if there is a revaluation, whether the new change is less than 10% or more than 10%. If it is equal to or more than 10%, then we need to give details of net carrying value of each class of property, plant and equipment, and also the other adjustments due to this and related depreciation, impairment, losses and reversals thereon. So one of the important things that was not there in Schedule 3 is that in case of any reversals of impairment, how to disclose it. Now this was also evolved over a period of time, and we used to show it in the schedule itself. However, now it is there in the Schedule 3 itself that the reversals are also to be shown there itself. So the calculation of change on account of revaluation of each class of PP is something that has to be prepared properly by the company, and the reversals that we talked about, which has a specific place now. The next change is a smaller one, which is about the security deposits. So the security deposits as such is omitted from the long-term loans and advances, and it is added under other non-current asset. So that's the change. However, in terms of the accounting standards, especially in terms of Ind AS, the classification of this may be questionable. So that's something that we will have to carefully think about. And if it is a financial asset and then a certain classification within that, if we are doing, then again the presentation will undergo a change. The next important, bigger and troublesome disclosure that's there is the utilization of borrowings. It's troublesome in terms of not from the intention. Obviously, government has the good intention of ensuring that all kinds of money trails are properly established. Things have to be adequately covered. It's troublesome in terms of the data collation. So how do you collect the data? So the simplest thing that it says is where the company has not used the borrowings from bank and financial institution for the specific purpose for which it was taken, the company shall disclose the details of where they have been used. So the intention is very straight, it's very clear. So earlier we had this, even now we have this in the CARO reporting, that in case of IPO or any kinds of issue of securities, there what we are doing is we will have an elaborate disclosure with respect to how the IPO proceeds are used, because IPO or any kind of security issue is done with specific purposes. When specific security issues are done, at that time the funds has to be used only for that purposes. Now we are talking about the all other borrowings from the banks and financial institutions. Now money is something that is fungible. To source to track from the source to the end use is not going to be easy. It's going to be it's not impossible also, but it's going to involve additional time and effort, and that's something that the client has to present, and also we have to verify appropriately that in case there is something that was not utilized for the purpose for which it was borrowed, then that needs a detailed disclosure in the financial statements. So few things here to note is that the tracking of money itself, as we discussed, may be a little bit problematic, because it's so fungible that it may be utilized continuously, and then how to track it, that it is used for only that purpose. So there is always this question of whether it is for the business or ancillary to the business, and ancillary to the business is considered for the business. So there are pages and pages of theory on that in Ramaya, as well as in so many court cases in terms of income tax also. So based on all those logics, we need to now understand that whether it is for the purpose and how it is utilized, and whether any residue is there, and if it is not used for the purpose that it is borrowed, then it may need an additional disclosure as well. That's something that's going to be heavy in terms of data collation verification. Ensuring that all the related details are available is something that will be necessary. So this will need some push from our side, and the client has to be prepared for this, to give all these details. There is onus on the company to prove that it was utilized for the purpose of borrowing. In case if they are not able to prove, then how do you report? Whether you report the full amount, report in the sense whether the disclosure will be that the full amount is not properly disclosed, or how do you even determine that what is the portion that is not specifically used for the purpose. So what I'm saying is, for example, if you have say 100 crores of borrowing, so 100 crores of borrowing is for certain things. So out of that, something else is also done that is related to business, not for any personal expenditure. So how do you want to say that there was 100 crores borrowing, so out of which this much was reutilized for the specific purpose, and then this much was ancillary? So I think the disclosure will evolve over a period of time, or there need to be more clarity in terms of what is it that is specifically required to be disclosed here. Then we come to the trade receivables schedule. We already had few things here, but the additional things is the bucketing of less than 6 months, 6 months to 1 year, 1 year to 2 years, 2 years to 3 years, and more than 3 years and total. So we had only less than 6 months and more than 6 months. Now we have additional bucketing of these aging. So you will have to show on the balance sheet as to how is the aging flowing. So if the system tweaks are to be made, then that is necessary to be made right away, because you will have to generate reports for the year end for the purpose. And then if you have quarterly closings and things like that, maybe you need to start buckling up for the upcoming half yearly balance sheet and things like that. So I think you need to start doing the trial run. Further, the trade receivables are classified into undisputed, disputed, undisputed considered good, undisputed considered doubtful, disputed considered good, disputed considered doubtful. Now disputed considered good is a question mark in itself, whether there will be something disputed but then can be considered good. This will be a long line of argument. A conservative basis tells you if it is disputed, not entire thing is considered good. So I think this may be a point that may be a heated argument between auditors and client. So that may be something that will need attention in terms of how do you classify it and where do you put it specifically, because you need a lot of supporting to say it is disputed but considered good, so 100% I'm going to receive. So if you say disputed but considered doubtful, then obviously it will be question mark as to how much is the provision required and what is the subjectivity, and how much is that you're going to use for yourself. Certain points here, schedule of aging is under both trade receivable and other non-current assets. So the point to note here is, if it is current, then the bucketing of more than 1 year, largely if it is defined by the operating cycle or otherwise, will not come. If it is other non-current, then the first two bucketing will not come, because if it is other non-current asset, then it cannot be less than 1 year. So accordingly the bucketing will has to be adjusted and it has to be presented. That's I think one of the things that we will have to think about. Here the term used is due date for payment, due date of payment, rather than it is due for receivable. So date it is due. So I think that's understood in spirit, but that's the difference in terms of terminology. In case of no due date of no due date is mentioned, then it has to be from the date of the transaction. So the same logic as the trade payable applies here also, that in case nothing is mentioned, then it is obviously from the date of the transaction itself. And yes, the bucketing system will have to be built. It has to be specifically put into the proper channels and proper pieces, so that the analysis can be done and the total tallying and other things has to be specifically be there in place. The disclosure relating to SBN, yes, there were lots and lots of discussions as discussed in the earlier session also. Ultimately, it is finally it is deleted, and ultimately it is rest in peace. That is SBN thing is gone out of the schedule 3 also. So there is no question of whether I should report, whether I should disclose or not, because some people took this conservative view and they used to put that heading and say nil, as this is not relevant for the year. There was no such event during the year. So that had continued for 2 years, 3 years, but then now it is completely gone out, and it's gone out from the auditor's report also, as discussed in the earlier session. Then as we have in SA 700 the specific section on legal and regulatory matters, now in schedule 3 there is a specific section on additional regulatory information. So it was only a earlier general instruction, the format and then certain notes. Now there's a specific section on additional regulatory information. So there are certain information that they are saying that this is regulatorily necessary to be disclosed in the financial statements. What are those? Number one, all these are, I think all the regulatory informations are difficult to collate. I would say it is not impossible, but then it was there, but then it is difficult to collate and present, maybe the right term to use. So details of all immovable property other than under lease and the agreement is in the name of the company. So what happens to the places where agreement is not in the name of the company? Then maybe it will come here. Whose title deeds are not held in the name of the company. So this disclosure is specifically for, so in Caro we disclose that whether immovable properties title deeds are held by the company, right? So that's one part of it. Now the disclosure in the financial statements itself is, if the immovable property, if the title is not held by the company, then the following disclosure is to be given. And if it is jointly held by others, then you have to disclose what is your proportion. That's what is the company's proportion or the share in the property. And what are the disclosures that are required? The relevant line item in the balance sheet, that is PPE or investment property, or in PPE retired from active use and held for disposal, and others, then we have to specify. Description of the item, obviously it is immovable, so land or building. So that's something that has to be there. Then we have to give the gross carrying value. Then we have to say that title deed is held in the name of whom. So if it is not in your name, then whose name is it in? Whether title deed holder is a promoter, director, or relative of promoter, director, or employee. So if it is not in your name, who holds it? And then in case if it is held by someone, whether he is a promoter, director, relative of promoter or director, or employee of promoter or the director, that needs to be given. And we all know that the term relative and promoter are quite wide in terms of implication, and it covers a lot of parties. Property held since which date? From when are you holding, from when is this property held in that name? And the last one is more critical. What is the reason for not being held in the name of the company? And if there is any dispute, that also has to be indicated. So what is the reason because of which? So one reason can be there is some dispute because of which it is not transferred. So if it is in dispute, it has to be mentioned there. Second, maybe there are old companies in which certain deeds documents are not in the name of the company. Some rules that existed at that point in time has leases and other things in some other name, in the government's name and things like that. So how do you handle that? Third type of category, there are some very old land and other things which are in the name of the earlier the Raja Maharaja Act and things like that. There are few acts in terms of those inheritance and all those things. I'm not specifically getting that name, but then those kind of acts. So how does you deal with that? Then it is continued to be held in those names and it is never transferred to the company's name. So all those details to collate itself is going to be a task. It's not otherwise difficult, but then it is difficult in terms of the data collation. So the company is 150-year-old or something, so then it is going to be a trouble. If the company is like 30-40 years old, it's still a trouble in terms of all these things. So one is the company has to start doing a detailed inspection of documents, and they have to keep it ready for the audit as well. In case companies which are very old, which we discussed, getting all the documents itself may be an issue. Reason for not being held in the name of the company may be difficult to ascertain at times, and the relative is a very wide term and many people get covered in it. Collation of all disputes will also be necessary if there are any disputes that are otherwise not affecting directly the financial statements, but still it has to be collated in terms of the disclosures. Now the next disclosure, there are 2-3 disclosures in the financials with respect to registered valuer. The next disclosure is with respect to disclosure of revaluation of property. If the revaluation of PP is done, then whether it is done by a registered valuer as defined under Rule 2 of Companies Act, or it is done by someone else. So I think there's a lot of impetus on getting so the term registered valuer was introduced a few years when the Companies Act 2013 came into picture. After that, there was a lot of impetus on standardizing the practices that are being followed by the valuer. ICAI has also issued guidelines on valuation, and they have made it mandatory for everyone to follow those guidelines if that all the valuation is made. So I think the further disclosure on whether it is done by a registered valuer is to give confidence to the users of the financial statement that it is done in a standard manner, and it is done in a way that it has to be adhering to certain assumptions and things like that. And that's why this disclosure is there. Now the point to be considered over here is, what if it is not a registered valuer? Is any action going to be taken, or is there anything that is otherwise? Nothing is written. It's only said that you have to disclose if it is not whether it is done by the registered valuer or otherwise. The next important disclosure, which is favorite disclosure, that's loans and advances. From ages and ages, I'm seeing that this is one of the favorite topic of discussion across balance sheet. So if in case of loans or advances, and advances which are in the loans nature of loans are granted to people who are promoter, director, KMP, and related party, either severally or jointly with any other person. So whether it is amongst them or with any other person, if it is granted to these people, that are repayable on demand or without specifying any terms or period of repayment. So either it is specifically mentioned that it is repayable on demand, or without specifying any terms or period of repayment, then the disclosure has to come in a manner that it shows the type of the borrower, the amount of loans or advances outstanding, and percentage of total loans and advances. So the promoter, director, KMP, and RP that I have put are each individual line items. So each of it we have to give a percentage. So say for example, if promoter, the loan is given as 100 rupees, then say the total of loans and advances is say 1000 rupees, then the percentage vis-a-vis 1000 rupees will have to be presented there. And similarly for director, KMP, and RP, each line item has to be separately presented, and a percentage of total loans and advances is something that has to be specifically presented over there. That's going to be so 185 has already put a ban on loan to director. However, there are other parties where these loans did exist, and that's why this disclosure has come into picture, which gives that these disclosures are to be provided wherever these kind of loans have been given. The next bigger disclosure. Now, all are bigger disclosure. There are only 4 or 5 tiny ones. So it's all bigger disclosures only. CWIP and intangible assets. So I have put in 2 tables over here, one of the CWIP and one of the intangible, because the disclosure is similar for both CWIP and intangible. So same type of schedule has to be given for intangible as well as CWIP. So in case of CWIP, what is it that you have to give is the aging schedule. So project in progress, projects that are temporarily suspended. Project in progress, easy to measure. Projects temporarily suspended. How do you ensure what is suspended? So is there going to be some technical certification that it has suspended, or if it is temporarily on hold due to COVID or other lockdown restrictions or anything, do you consider it as suspended? What is it that you are going to consider, and when will the project be suspended? So those are the questions that you will have to understand. And also you need to read the, one has to read the terms of the project very carefully to see the certain definitions, because these are the catches in the legal agreement that will be there, which will say that these are the terms on which it is treated as suspended. So those are the things that has to come out very clearly. And then the aging of the CWIP, that is less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. So again, this aging has to be provided, and they have specifically said that the total shall tally with the CWIP in the balance sheet. Obviously this total has to tally with the CWIP balance sheet, it can't be otherwise. So that's the aging for the CWIP as well as the intangible asset. Under intangible asset also similar table, and under the CWIP also similar table. And for CWIP or intangible assets whose completion is overdue, let us understand what is overdue. So overdue is maybe a term which was fixed. Say for example, a project is supposed to end on 5th of June. Okay, so if it extends beyond 5th of June, then it will be overdue in plain simple language. However, there can be amendments to the agreement, there can be extensions to the agreement, there can be delay in legal grants, so it may get extended and then it may get completed in say September, December or whatever. So how do you consider those extensions? Do you simply go by the earlier date, or you will go by the extended date? How do you legally interpret? Maybe a question here. Or the second part is most important, has exceeded its cost compared to its original plan. That means something that the company has planned for, say that project that was to end on 5th of June was supposed to incur 500 crores. However, as on April 5th itself, it's already incurred 560 crores or 520 crores. So the budget versus actual, which you used to take for the audit working papers, is something that is necessary to be maintained very thoroughly and very meticulously by the companies also, so that if this disclosure is warranted, this will come from that kind of MIS itself. So this disclosure, completion disclosure, has to be given in these two cases. One, if it is overdue, measurement of overdue is very necessary. Second, if its costs has been exceeded as compared to its original plan, then this CWIP schedule is mandatory. Projects where activity is suspended to be given separately. Now again, that project, what is suspended, what is not suspended is different. Now if you see the first table, it talks about projects temporarily suspended, and here it says projects where activity is suspended. So what's the difference between the two? Is it temporarily suspended different from projects where activity is suspended, or it is both suspended? Not sure. How do you interpret? So maybe some legal opinion is required in some very complicated or typical matters over there. So that has to be seen very typically and very properly. And this has to be given project wise. So project 1, project 2, we have to give the proper aging in terms of less than 1 year, 1 to 2 years, 2 to 3 years, and more than 3 years. So if the project is overdue and it is going beyond 1 year, then you can understand that there are problems or whatever. How do you want to understand? Then this may not be only a simple table. Maybe the companies will like to explain it or give footnotes also, because they may be in a position that they have to explain certain things so that a proper understanding for the user of the financial statement is put out. Yeah, in terms of loans and advances, open-ended lending is being curbed completely. That has started years ago. I think all the ways of open-ended lending is being completely curbed out. More details are required there. In terms of CWIP and intangible schedules, that is the aging and completion schedules, it's almost reproduction of our audit working paper over there, because these kind of agings and these kind of analysis we all used to take. So it's almost like reproducing the audit working paper over there. Very detailed information is required. careful reading of project or extension and the terms and conditions of suspension, etc., are very much needed. And activities are suspended, project is suspended, temporarily suspended. So the terms have to be accordingly understood. And in larger companies, where in companies where there is infrastructure projects, where there are projects aided by government, where there are local projects that are going on, municipal projects and other things, the definition, the measurement of these things may be may have to start right now, because otherwise it will be difficult. Already there may be things that are existing of schedule, of the second schedule here or the second table here. So working has to start right now. The next disclosure is about the Benami property. So there are various measures that have been continuously taken by the government to reduce all kinds of Benami property and make it completely out of practice. And it's not allowed. Obviously, it's a prohibition act. So what is the disclosure that is required? Disclosure of any proceedings initiated or pending, either initiated or pending, against the company for holding any Benami property under the act, with all details. What are the details required? Details of such property, year of acquisition, amount, who are the beneficiaries, reference to the item in the balance sheet if it is in books of account. If not in books of accounts, you have to say why it is not in books of accounts with reasons. Any proceedings against the company, either as an abettor or transferor, then such details should be provided, like nature of transactions, nature of proceedings, status of these transactions, and company's view on the same. So here again, it's another task of data collation. That's actually the completeness of data, maybe a question mark here. So when the company even discloses, how will you ensure the completeness of this transaction, the completeness of this disclosure? It may be a question here. The details of beneficiaries, it may not be available readily. It's difficult to collate. You have to collate it and then you have to put it. If property is not in the books of account, so from an auditor's point of view, how do you find out if the property is not in the books of account? So if the company tells you, then you will come to know. But even by certain procedures, like you may not be able to find out that it is something has been initiated in this regard if the property itself is not in the books of account. All pending cases in this regard, along with the status, to be properly collated, because that has to be presented over here. Enhanced disclosure with respect to borrowings from banks or financial institution on the basis of security of current assets. We all know that there's a regular practice of hypothecation of stock and debtors, and then loans are taken and then different balance sheets are submitted to them. So there are estimations, there are extrapolations, there are incremental turnovers, etc., futuristic balance sheets that are submitted by the company. So here comes the hammer. It says that you have to give the quarterly statements, whether the quarterly statements or the returns of current assets filed by the company with banks or financial statements are in agreement with the books of accounts or are not in agreement with the books of accounts. In a way, they're trying to control all the NPA, because something that has been given on the basis of incremental extrapolation items, so that will automatically get cut down because it will be as per the books of account. If no, then summary of reconciliation, reason for material discrepancies, if any, to be adequately disclosed. So this is something that we need to start educating our client right now, to say that you need to, whatever you are preparing for the submission of to the banks, you always need to keep a backup of what are the reconciliation items you had, and then what are the discrepancies and what are the reasons for discrepancies. So the reasons for discrepancies cannot be arbitrary, obviously, because you're going to present it in the financial statements. It has to be appropriate and it has to be supported by appropriate evidence. Company has to make available all the details and tally it with the books of accounts also. Preparation of reconciliation and reasoning out discrepancies will require dedicated time and resource. It's not going to be easy. It needs to be a dedicated time and resource. What happens to estimations, projections, extrapolations? So all those things will have to be explained in terms of deviations. banks may not, over a period of time, if this is the practice that's going to happen, then banks may not accept provisional information at all. So this is a thought that, they will only go for uh, uh, audited or reviewed financial statements, in short. The next disclosure is relating to where there is a where the company is declared as a willful defaulter. So willful defaulter is a definition wherein person or issuer or which is categorized as a willful defaulter by any bank or financial institution as per the RBI norms and as per the RBI guidelines. If the company is declared as a willful defaulter, then it has to give the following disclosure. What is the date of declaration as willful defaulter? What is the details of default? That is the amount and nature of the default. So the company has to say that the company was a willful declassified as a willful defaulter, and these are the defaults that it has made, and this is the date of the declaration of company as a willful defaulter. The next important disclosure is with respect to the company in the details of any transactions by the company with any company that has been struck off under section 248 or 560 of the company. So if the company is a defunct or it is not functioning, and due to certain other reasons, if the company's name is struck off, and if the existing company is having any transaction with those companies, that needs to be disclosed in the financial statements of this existing company. What are the details that are required? The name of stuck off company. So this may be a company A. So there may be a company that is stuck off, which is company B. So it has to give that if there is any transaction with company B, then that name of the company, that is B. Nature of transaction, whether it is invested in any securities, receivables, payables, shares held by stuck off company, and other outstanding balances. So any kind of asset liability or any kind of transactions that this company, existing company, had with the company that is already stuck off, that needs to be mentioned. And then the balance outstanding has to be mentioned. And if there is any relationship with the stuck off company, that is if the stuck off company is a parent, subsidiary, whatever, associate or joint venture, whatever, that has to be specifically disclosed. This is again a curb on the routing through of any kind of money, or if there is any money that is already stuck in these companies, then that has to be provided for written off, so that over a period of time things are circulating. Next disclosure is with respect to registration of charges. There has been, I think, various review points by various regulators in terms of verification of statutory records also by the auditor. And also it was in MCA, I think MCA has also issued various orders in terms of registration of charges. So there has to be disclosure in the financial statements as to whether where any changes or satisfaction, where any charges or satisfaction is yet to be registered with the ROC beyond the statutory period. So say 30 days is the period within which it has to be registered. If it is crossed 30 days, then the details and reasons thereof shall be disclosed. I think this is also there in the company secretary report, that is wherever secretarial audit is compulsory, but then they have made it as a disclosure in the financial statements also. Then the next one is about the layers of the company. So as we know that there are certain number of layers that is allowed, that is 2 layers that are allowed as per the provisions of the Companies Act, and that is which is mentioned under section 2 subsection 87 along with the rules. So if there is a third layer that is existing, or there is a non-allowed layer that is existing, the details of name and SIN number of the companies beyond the specified layers, and relationship, extent of the holding of the company in such downstream companies shall be disclosed. It has to be disclosed level by level, what is the excess disclosure and what is the excess holding or the excess layer that is created, and the details of the name and the SIN number and the relationship as well. The next bigger disclosure is about the ratios. There are certain ratios that are specified to be part of the balance sheet now, part of the financial statements, I would say, not the balance sheet, part of the financial statements now. There has to be explanation for numerator and denominator. There has to be reason for more than 25% variation. That is, if the variation is 25% or more. So this is nothing but the analytical review that we all auditors use. The same thing has to be presented in the financial statements. So the ratios are current ratio, debt equity ratio, debt service coverage ratio, return on equity ratio, inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, and return on investment. All these disclosure with explanation, what is there in numerator, what is there in denominator, along with variation column, that is percentage as compared to the previous year. If it is more than 25%, then an explanation on what is the variation due to. That's something that is necessary, that is envisaged in the financial statements now. The next disclosure is in terms of scheme of arrangement. That's any kind of business combination, acquisition, merger, anything that you have. So as per the requirement, as of now, if there is any scheme of arrangement or anything has to be filed with NCLT or any other appropriate body, there has to be a CA certificate. So chartered accountants, statutory auditor certificate, I would say statutory auditor certificate in terms of the scheme accounting. So accounting of the scheme is in accordance with the accounting standard, is something that we have to certify, and after that the scheme, it goes to the court for NCLT or the court for approval. So now there is a requirement in the financial statements to say that the accounting as per the scheme, the accounting of the arrangement, scheme of arrangement is in accordance with the scheme, and that is in accordance with the accounting standards. And if there are any deviations, then that has to be reported. So already there is a certificate. Now this is certificate is internal, that is between the company and NCLT. Now this is something that is coming out in the financial statements as an additional disclosure. It says that this has to be put on the financial statements, that the scheme, the accounting as per the scheme, account is as per the scheme, and that is in accordance with the accounting standard. And if there is any deviation, then that is being specifically explained. So all these amendments are very wide in terms of the charges, etc. So you have to call out all the details, and that has to be provided. It's already covered in the secretarial report. Ratios are not defined specifically, so it's still, there's a little bit of ambiguity there. One can arbitrarily include something into the numerator, denominator, different views may be taken, so it's difficult to standardize. But then they have asked for explanation, so maybe they want to see the comparisons and then make standardized ratio or something. But then as of now, ratios are envisaged for. And the scheme of arrangement thing, it's double reporting. The statutory auditor already gives a certificate, now it is reproducing that certificate content over here. So if we are issuing those certificates and then looking at accounting, we already have to be quite careful over there. The next biggest thing is about the reporting in the earlier session that has been talked about. So this is about in case the company has advanced, loaned, invested, either borrowed funds or share premium or any other sources, funds received from any other sources or kind of funds to any other person or entity, including foreign entity, which may be an intermediary, with the understanding whether it is recorded in writing or otherwise. So then the intermediary shall directly invest, directly or indirectly, lend, invest in other persons, entities identified in any manner whatsoever by on or behalf of the company, or provide any guarantee, security or the like to on or behalf of the ultimate beneficiary. Then the company is supposed to disclose date and amount of fund advanced loan invested with complete details of each intermediary, date and amount of fund further advanced by them to the third person, date and amount of guarantee, security and the like to third person, that is the ultimate beneficiary. And the last thing, which is quite heavy, is declaration that relevant provisions of FEMA Companies Act has been complied with for such transactions, and those transactions are not violative of Prevention of Money Laundering Act. Those are the kind of disclosures that we need. And this is not one-sided. It obviously applies to the other side, wherein company is in receipt of, or it is the intermediary, or it is the ultimate beneficiary. If it is received, so if you substitute the words advanced loans invested with received there in any form, so that kind of disclosure is envisaged even if you are on the other side, that is you are on the receiving side. So few things here are very important to consider. Compilation of this data for this disclosure itself will be a task, as to certain things are open here, as in whether it is out of borrowed funds, share premium, those things can be traceable. Any other sources, what is any other sources, kind of funds, don't know what are those. So, and to any other persons or entities, with the understanding whether in writing or otherwise. So even if it is a verbal agreement, you are supposed to disclose this. So this is very wide ranging, and then you don't know where to get the data from. Completeness of information is always questionable. In terms of audit report also, the reporting on this clause that is required is management has represented to the best of its knowledge, and we are supposed to report that there is no material misstatement in the management's representation. So collating this data, then ensuring completeness of this data, compliance with all these laws and regulations, that is FEMA, Companies Act, anti-money laundering regulations, and then collating the other sources of funds, kind of funds, all these things is going to be a big task. So we have to be well prepared. We have to educate our clients. We have to start getting the things right now from today. So for opening balances, maybe we have to start working for, and during the year, whatever transaction happens, then we have to accordingly work for that. Now there is a declaration that is asked for. There is no format of declaration. So will it be as a form of the other, the above transactions are in accordance with or are not preventive of whatever, that kind of a declaration, or there has to be a declaration that has to be given by the board of director or something, the way, you know, in as part of the board of directors report and things like that. That is something that will has to be that will have to be seen. So this is a massive section, both on the receipt side as well as on the payment side. That's all about the, I think, balance sheet items. Statement of profit and loss account, minor changes, addition or deletion. So revenue is struck off, and instead of that, the word income is put in. Revenue from operations, grants or donations received is a separate line item in case of Section 8 companies. Now, this is another interesting disclosure. So what it says is that if the company shall give details of any transaction not recorded in the books of account that has been surrendered or disclosed as income during the year in tax assessments under Income Tax Act. So if something was not part of the balance sheet or the P&L, but it was disclosed as an undisclosed income, then that details have to be given here, such as based on search, survey, whatever, unless there is immunity of disclosure under Section 11 over there. And it shall also state whether the previously unrecorded income and related assets have not been recorded. So both sides, one is if something undisclosed is presented, that has to be disclosed in the year in which it is disclosed, and in the next year the verification has to be done, or the confirmation has to be given in the financial statements that whatever was undisclosed is now accounted for properly. So this may be you know, food for thought as to identify all those things and get it accounted well in time. CSR, a lot of questions, lot of FAQs, lot of COVID-19 related CSR questions. Everything was floating around. Few of the specified disclosures here. What was the amount required to be spent? What is the expenditure incurred? What was the shortfall? Total of the previous year's shortfall. Reason for the shortfall. Nature of CSR activities. Details of related party transactions wherein the contribution to the trust control as per, so trust is floated for the purpose of complying with CSR. Then what is the contribution to the trust? In case provision is made with respect to liability incurred, the movement in the provision. So detailed disclosure of CSR. So CSR started with no disclosure to all disclosure now. So there's a detailed disclosure that is required. So all the questions or all the FAQs that had been raised over a period of time has now been made as a disclosure. So there is end-to-end clarity. The next disclosure is this was never on the this was never in the financial statements ever. The details of cryptocurrency or the virtual currency held. So there was a prohibition act, and then there was a Supreme Court order. Then there is a bill that is staying there which says that it is going to be banned. Many people we know, like in newspapers and all, what we read is that they hold cryptocurrency. So many people are trading in cryptocurrency. So if at all the company is trading in any cryptocurrency or virtual currency, disclosure is to be made on account of profit or loss on transactions which is involving this cryptocurrency or the virtual currency, amount of currency held as at the reporting date, deposits or advances from any person for the purpose of trading or investing in these kind of currencies. So that's the disclosure that is required now. That's all about division 1. So we come to division 2. Whatever was there in division 1 applies equally to division 2, and only the incremental ones I have tried to cover. Additional disclosure in division 2 is that addition under equity and liability, the lease liability as a separate line item or a subheading is added. Same under current liabilities also. Additional disclosure under notes, that's the balance sheet each headwise. Under other financial assets, the security deposits, bank deposits with more than 12 months maturity, and others. These 3 line items have been added. These are tiny, but these needs to be paid proper attention to because disclosure goes appropriately. In the statement of changes in equity, there are additional disclosures in terms of change in equity share capital due to the prior period errors, and then restated balance as at the beginning of the current period. If anything, if any changes in SOSI because of the changes in the due to the prior period errors, then that has to be put out in a column, and that has to be then the opening balance has to be the restated balance has to be specifically shown. That was being shown as a part of the note, but then now there is a column there specifically. Trade receivables we discussed, undisputed, disputed, but here the classification is slightly different. We all know that the ECL and other things that apply based on Ind AS. So the classification is undisputed trade receivable, considered good, undisputed trade receivable, which has significant risk in increase in credit risk, and then what is credit impaired. Similarly, for disputed trade receivable, what has a significant increase in credit risk and what is credit impaired, that has to be coming there. Then trade payable, MSME, disputed, others. These are the normal and the entire aging. All those aging and other things will same apply both. Only the classification in terms of trade receivable is changing here. Other financial assets, there's an all-inclusive heading which incorporates financial assets that do not fit into any other financial asset categories. All that can be parked here. Other financial liabilities, as we saw earlier, current maturities of long-term debt and current maturities of financial lease obligations are omitted from here because it is shifted to the other place. Non-current liabilities, long-term maturities of finance lease obligations are omitted from here because that is being disclosed other. So additional regulatory information, everything from immovable property title to everything till the Benami transaction, everything applies. In addition, there are 2 other changes. Because in Ind AS we do various fair values. So in case of fair value of investment property as measured for disclosure in the financial, for the purpose of disclosure in the financial statements, whether that is based on registered valuer or not is something that is necessary to be disclosed. Whether it is done by a registered valuer or other valuer, that is something that has to be disclosed. In case the company has revalued its intangible assets, PPE, including ROU, right of use, if there is any such changes, the revaluation that has been done, then whether that revaluation is again on the basis of registered valuer or otherwise is something that is necessary to be disclosed. So these are incremental disclosures as compared to division 1. Then division 3, division 1 plus division 2, everything that we saw in division 1 plus everything that we saw in division 2 is applicable, plus whatever is applicable to NBFC. So these are the additional disclosure of ratios in the financial statements that is applicable to NBFCs. That's capital to risk weighted average weighted assets ratio, tier 1 CRAR and tier 2 CRAR, and then liquidity coverage ratio. These are the specific ratios. So these are already defined by the RBI circular. These are the specific ratios that has to be disclosed on the financial statements of a NBFC Ind AS FS. I think that's the entire gamut of amendment to Schedule 3 as we see now. I think things are evolving. There will be guidances that will be provided. I think there is guidance note also that will come out, and various things that are happening. But then we need to be proactive in identifying the issues and talking to our clients in terms of the problem areas wherein we see that these are the things that may have additional impact, which may require working from today itself rather than waiting till the next quarter, year end or whatever. So I think that's all from my side. If there are any questions, happy to take those questions.
We can take this question. Chat box. Chat box में देखो कितने questions हैं. Yeah, Padmashree, we can look at the questions in chat box. Control. इसका keyboard. Just go to the first slide. Mouse ऊपर. Chat box में go to the top of the question. Top of the question. ठीक. Okay.
Dear ma'am, sir.
ठीक है. Padmashree, are you there?
Yeah, I was saying please allow me to unmute because it was disabled. Hello, can you hear me? Hello, can you hear me? Okay, sure. So I'm just opening the chat box. Okay. The changes in Schedule 3 are applicable for the audit report issued for FY 2021 or FY 21-22. So this is a common question that is coming up time and again. The answer to this should be, in my view, should be it is applicable for FY 21-22. If you look at the notification, it says that it is applicable from 1/4/2021. So the Schedule 3 itself is applicable from 1/4/2021. So for the financial years 21-22, it will be applicable. Accordingly, in the audit report, if you see 2-3 of these points that we discussed are the ones that are sitting in the audit report as well. So if the company has not prepared or presented those things, then how can we report? So I think in my view, it should be 21-22. And in WIRC Mumbai seminar yesterday, I think one of the esteemed personalities were also mentioned that in his view also it has to be 21-22 itself. PPT, yes, I'll send it to the coordinator and Mr. Chintan, and it will be shared, right? The changes in Schedule 3 are applicable. I think that we saw about. So same question.
The schedule is
yeah. Any other question?
I think everybody is confused about affiliates. Or I'm more confused whether we do today or next year.
Yeah, it will be from next year because this year financial statements. So that is when I think you also mentioned in your session that if you have to make the financial statements by, many of the companies do release their financial statement by 7th or 8th of April. So if you expect all these changes to be done in 5 days, I'm not sure how you're going to cope up with that. But I think a better way is to disclose by way of a note that these amendments we believe is from the next year. That's my view.
We have just few minutes left, so if anyone has questions, they can ask questions. Or I have one question for you, Padmashree.
Yeah, sure.
As per your experience, what do you feel are the top three challenges for industry?
Top three?
Top three challenges for industries to comply with the Schedule 3 amendment.
Top three challenges is number one, data collation will be biggest problem. And then the systems, the way the systems work, as you mentioned in your earlier session, the audit trails and things like that. So those are the things that will be actually problematic, and many of the changes is something that those are always expected, or that should have been there kind of a situation, rather than it is coming now. But then there again, calling out all the data itself will be a question mark. So it's all about you start today so that you meet the expectations by year end, whether it be Benami transactions, whether it be trade payable scheduling, aging. So all these are additional work or additional way of collating of all this data and ensuring accuracy and completeness. So collating data is one side, but accuracy and completeness is very difficult to ensure.
Yeah, exactly. I think data gathering and collation is one of the most important issue for all of us. But when we look at the information which are going to be disclosed in annual report, I'm positive that these are the very, very critical information which will be useful to the stakeholders. So what is
Absolutely.
your take on this? When you feel this is really government has done the right thing of asking this information to be part of the annual report?
Yeah, absolutely. In a way, all these things, as I think repeatedly during the session is said, that the intention is absolutely good, and it will bring out all the things on the plate at one place in the financial statements, whether it be Benami transaction, whether it is lent through different layers, whether it is lending to people without any proper arrangement and things like that. So the intention of bringing all these things on one platter is super fantastic and tremendous, but the only problem is it will evolve and it will take some time to settle down, because the feeling as of now that everywhere that is floating is, oh my god, this is too much. But then I think it will settle down in some time. Is That's how it's like 6 years ago when this new schedule 3 had also come, they said okay, my printing cost will go up, was the first comment that I had heard from someone.
Right. See, in my book, Capital Work in Progress Aging Schedule, I think that is very critical because I've seen so many companies have the amount which is boggling up for so many years.
Yes.
And without knowing that for how many years they can continue. So, and a lot of expenditure has been capitalized in CBIP for years and years together. I think aging of CBIP will have more information plus trade receivables, because less than 6 months and more than 6 months was not appropriate.
Yes.
Because now more than 6 months is something which is routine. So everything which is more than 6 months is told. And now if we are required to classify to more than 3 years, then I think that will provide more information to the stakeholders. They will understand that this company has a huge amount which is more than 3 years outstanding. So then the collectivity of the amount is on question mark.
So the comparison between giving the operating cycle vis-a-vis the amount outstanding more than 3 years will be more relevant. So if I have an operating cycle of more than 2 years, then it makes more relevance to me to see most of the things more than 3 years. Rather, if my operating cycle is within a 1 year and if things are sitting more than 3 years, then I should be worrying. So that brings more relatability and understanding over there for if you want to do some analysis on the financial statements.
So that means importance of disclosure of operating cycle is increased. Earlier operating cycle disclosure was there, but no one was able to understand now properly. Now they need to understand properly to analyze effectively.
Yeah.
Right. I think there is no further questions. So now I request Sunil B to or Chintan to do what of things.
Good afternoon, everyone, and thank you, Chintan bhai, for giving me this opportunity. Since last 1.5 hours, we have been enjoying recent amendments made by the MCA through account rules and Schedule 3 amendments. First of all, I would like to thank you, Chintan Bhai, for their short but effective sessions on these amendments of the accounts and their related rules. And second session of Madam was really excellent. She has gone through all the important aspect of Schedule 3, covering all the details very minutely, and in-depth analysis has been provided by her. So on behalf of Ahmedabad branch and all the participants, I propose hearty vote of thanks to the Madam for sharing their views and spending their valuable times with us. Thank you so much again.
Starting after 10 minutes.
Okay, our next session will be after 10 minutes. Thank you.
Welcome back after the session of the company law. Chairman CA Ajit Dhariwal, Secretary CA Anjali Choksi. Today's faculty CA Ajit Shah and Atul Shah. Our next session, as we know, that is on the trust for the new provisions which were incorporated now in the Finance Act 2021 for the re-registration of the trust. The analysis of the entire procedure, theoretically and the practically, today Ajit and Atul they are going to take care of. Let me introduce Ajit Shah, who is treated as a master of the trust. His opinion is valuable, or as the decision of our department on the trust, I would like to say. He is our past chairman of Ahmedabad branch in 1991, the vice chairman of the WIRC in 1993, president of the CA, Chartered Accountant Association of Ahmedabad in 1996, president of All Gujarat Federation of the Tax Consultants 2005, as co-opted as a member of the students of the committee ICAI 2001, delivered many lectures at the various forums and author of the various books on the this topic. Another co-faculty, CA Atul R. Shah, is a proprietor of the Atul R. Shah and Company. He is in practice since 1985. He is a past secretary of the Chartered Accountant Association, Ahmedabad, and is a co-compiler of the book on the VAT published by the WIRC. With this brief introduction, we welcome you, sir, and I would request CA Ajit Dhariwal to felicitate the faculty, first faculty, that is Ajit Shah. Welcome, sir. Now I would request CA Anjali Choksi to felicitate our another faculty, co-faculty, Atul Shah. Welcome, sir. Sir, we are obliged and thankful for giving you time. And now the dais is yours, sir. And we are starting.
Chairman of Ahmedabad branch, CA Ajit Dhariwal, Secretary, CA Anjali Choksi, Treasurer, Sunil Sanghvi, my co-faculty, CA Atul Shah, fellow participants, and the participants virtually who are observing this seminar. First of all, I am really thankful to the office bearer and particular to the Sunil Sanghvi for inviting me for this kind of a session. Before 15 days, he said that would like to have your session, but I say the form has not received. And the moment it received, so he immediately said, we'll have a lecture of you on this particular subject. So I'm again thankful to him, because if he didn't offer me this, I couldn't go through this. So to give my views on this particular subject, today I am before you. The first, I would like to brief you about what is this new procedure. The new procedure is, friends, to update register of charitable and religious trusts. The finance minister of our country, Srimati Nirmala Sitharaman, had presented a proposal in Union Budget 2020 to make substantial amendments for granting registration to charitable religious trust or institution, etc. Under the new tax regime, it was proposed to amend Section 1023C, Section 12AA, 12A, Section 35, and Section 80G. All these amendments are proposed to be made with effect from 1st June 2020. That was the original proposal in Budget 2020. The said budget proposes to the process of registration of a charitable trust. Even the existing charitable institutions are also required to apply for fresh registration under the new provisions of Section 12AB of the IT Act. All the existing charitable trust or institution registered under Section 12A, 12AA, 1023C, 80G, or Section 35 under the new provisions to claim exemption as the case may be. So it has covered not only the Section 11 and 12, but they have covered all the sections starting from 1023C, then 12A, 12AA, then 35 and 80G. Due to this procedure, for registration under Section 12AA of Income Tax Act 61 has been omitted with effect from 1st June 2020. Due to insertion of subsection 5 in Section 12AA. Due to this procedure, Section 12AA5, nothing contained in the section shall apply on or after 1st day of June 2020. And a new Section 12AB procedure for fresh registration was come into effect from 1st June 2020. With the proposed amendment, new Section 12AB procedure for fresh registration was to come into effect from 1st June 2020. These all are very old ones. And the trust and the institution were required to apply for fresh registration and approve under the new Section 12AB within 3 months, that is from 1st June 2020 to 31st August 2020. Similarly, charitable trust and exempt institution which are avail exemption benefit under Section 80G of the IT Act was also required to apply for fresh registration under Section 80G by 31st August 2020. Subsequently, in view of the economic crisis due to COVID-19 pandemic and the resultant nationwide lockdown, the CBDT had decided to defer the amendment and the new procedure was introduced an approval registration notification for certain entities from 1st October 2020. So from 1st June, it has been shifted to 1st October 2020. Now, according to the entities approved registration notified under Section 1023C, 12AA, 35 and 80G of the Income Tax Act would be required to file intimation within 3 months. That means from 1st October 2020 to 31st December 2020. So originally it was given 3 months. Again, it has been given 3 months that you have to apply during this time. The same amendment procedure for approval, registration, notification of new entities also deferred till 1st October 2020. And this was issued by CBDT by way of a press note dated 9th May 2020. However, no legislative amendments were carried out till then. So Till that, only the press note was issued and no legal procedure were made. Later on, legislative amendments were introduced by the Taxation and Other Laws, Relaxation and Amendments of Certain Provisions Act 2020, which has further extended the new registration and other procedure under Section 12AB of the Income Tax Act and other section to April 1st, 2021. So if you'll see from June 2020, again it went to October 2020, and now it is April 2021. These amendments were carried out in all the related provisions which were introduced by the Finance Act 2020. Hence, new provisions related to charitable trust and other institutions shall now apply from finance year 2021-22. Now, the registration procedure prescribed under Section 12AB for charitable trust and other related provisions, as introduced by the Union Budget 2020, has been deferred and extended to April 1st, 2021. Both the renewal of registration under Section 12A or Section 12AA, as well as renewal of approval under Section 80G is being deferred. Very surprisingly, to note that all the amendments made by the Finance Act 2020 in Income Tax Act 1961 have been withdrawn first and reintroduced all these amendments from 1st April 2021. Now, all the trust and institution is required to apply for registration and approval under new Section 12AB of the Income Tax Act within 3 months from April 1st to 2021 to 30th June 2021. Now here the question is, all the trusts which are registered till now, they have to apply for re-registration. What is the reason why they have introduced this new registration? The government is of the view that they would like to make a simple, easy registration. They find that there are many charitable or religious trusts. They are not doing any kind of activity, though they are registered. And to make them in a list, they said now fresh application, all will have to file. And that is why it has been introduced. One way they say that to simplify the law, to simplify the act, we have introduced this new system. But it may be difficult for the assessees or for the trustees of the charitable or a religious trust. One more thing I would like to say in a lighter way, friends. When I heard the word simplification, I remind a small story on the basis of simplification. Once God blessed on Indira Gandhi and said that you ask me 3 questions, I will reply. Naturally, we know the first question, when my son Sanjay Gandhi become Prime Minister of India, God says, not during his lifetime. Fortunately, unfortunately, it comes true. Second question, when my son Rajiv Gandhi become Prime Minister of India, God says, not during your lifetime. Again, that comes true. And the last question, when the Income Tax Act becomes simplified in my country, God says, not during my lifetime. So that was the simplification we can say. And we find that though they say it is a simplification, but according to we people, it is not that much easy. Now we'll see what is the procedure and very easily. So this is the preamble I have given you, Section 1023C, which was introduced from 1st April 1976. Section 12A, which was introduced from 1st April 73. Again, Section 12AB, which was introduced from 1st June 2020, but now we can say 1st April 2021. Section 35, which is the very old one, which was introduced from 1st April 1989, and Section 80G, which was introduced with effect from 1st April 68. So these are the four sections which they have proposed, and they will have to follow that particular sections. Now, a long-awaited bill was introduced by our finance minister. We know that it is to be changed. From when? 1st April 2021. So till that we were waiting when a new procedure, when a new form will be given to us. And ultimately, there were reviews that the date may be extended because till 25th March, nothing was heard. As I said, that Sunil Bhai has told me on 20th March, sir, we would like to have a session on this. I said, but till date, nothing has been come. So on 26th March 2021, the bill came into force from 1st April 2021. So this is the story of new amendment of re-registration. Now we'll see one by one what is the procedure for this. The first is Rule 2C. Here they have introduced a new rules. Rule 2C, application for the purpose of grant of approval of a fund or trust or institution or university or any hospital or other medical institution under section 1023C, clause 1 or 2 or 3 or 4 of the first proviso shall be made in the following form. So 1023C5, we all know, section 10 speaks about income which doesn't form part of the gross total income. And accordingly, the income of 1023C, the institution or the trust which has been registered under section 1023C, their income are exempt. Now, what they said, that they have introduced two forms, form number 10A and form number 10AB. What is to be mentioned in 10A, what is to be mentioned in 2AB, that will be taken by my friend Atul Bhai, and he has prepared a PPT so that you can easily understand what they want to convey. Now, form number 10A, in case of an application under clause 1 or 6 and 1 and 4, and form number 10AB, in case of an application under clause 2 or 3. Now, what is clause 1, 1023C? 1 is saying that where such fund or trust or institution or university or other educational institution or hospital or the other medical institution is approved under the second proviso to this section of 1023C within 3 months from the first day of April 2021. So those who are being covered under this, they have to apply fresh application from 1st April 2021 till 30th June 2021. Now, number 2, where such fund or trust or institution or university or other educational institution or hospital or other medical institution is approved and the period of such approval is due to expire. It has been already approved and period is due to expire at least 6 months prior to the expiry of the said period. So they have to submit form number 10B. 10AB, the same way, where the such fund or trust or institution or university or other educational provisionally approved. It has been provisionally approved, then again they have to submit form number 10AB and they have to get registered again. And in any other case, at least 1 month prior to the commencement of the previous year, relevant to the assessment year from which the said approval is sought, they have to submit form number 10A. So who has to submit form number
Done, sir.
Then fine. Sir. Now, where the application has been existence during any year or years prior to the financial year. Fine.
Sorry, sir.
No, it's all right. Where an application has been in existence during any year or years prior to the financial year, self-certified copies of annual accounts of last 3 years. So here you should be taken care that past 3 years. Yes.
Sir, can you start again from 10A?
10A.
Participants.
Okay, sure. Those who are on a virtual, they are not able to hear the voice due to voice problem. Now I will repeat it and little bit hurriedly so that the persons who are sitting here, they may not be bored. Correct? Same thing I have to repeat it. That's why. So you have to apply for new application either in form number 10A or in form number 10AB. Now, along with this application is to be made to the commissioner of principal commissioner or the commissioner authorized by the board. Now, along with this application, what you will have to attach? The first they say where the application is created or established under the instrument self-certified copy of such instrument. Now, what instrument? Instrument means if you have created the trust, a self-certified copy of trust deed or a constitution. Number 2, where the applicant is created or established otherwise than under an instrument self-certified copy of that document. So you have no trust deed or you have no constitution and you have applied on the basis of other things, then you have to give that copy of that particular declaration. Third one, self-certified copy of registration with registrar of companies, section 8 companies, self-certified copy of registrar of firm or societies or registration with charity, public charitable trust, public trust act. Self-certified copy of registration under foreign contribution regulation act 2010. It is not necessary that all the trusts are being registered under this foreign contribution regulation act, but if your trust is registered, then you have to attach a copy of that certificate also. Then self-certified copy of the existing. It is but natural that you have got the existing certificate, you have to attach a self-certified copy of that 1023C certificate. If an application under section 1023C has been rejected, this is important, then you have to attach a copy of that rejected order. Now, what they would like to have this kind of information. Once it has been rejected, now I'm fulfilling the requirements. Or suppose if it has been rejected and I do not attach. So, but it is there in the section where the application has in existence during any year or years prior to the financial year, self-certified copies of annual accounts of last 3 years. Please remember that here they have said annual accounts of last 3 years. They didn't mention audited accounts of the last 3 years. So the vast difference between annual accounts of the last 3 years and audited accounts. So if it has not been audited, then also you have to submit it. And where a business undertaking is held by the applicant as per provision of section 11(4), if any trust or institution is doing a business, then self-certified copy of last 3 years annual accounts and
self-certified copy of audit reports under section 44AB. So if the trust is doing a business and if it exceeds the limit of 44AB, then you have to attach that 44AB copy. And the last important thing is notes on the activities of applicant. As I said in the beginning, that there are many trusts, they are being get registered, but they are not doing any kind of activities. So if you are saying that since last 3 or 4 years, there is no activities, then your certificate may not be renewed. Because they said you have to do activities. I remember that on the basis of activities, during 2011-12, they were not issuing the certificate of 12AA. And ultimately, the Gujarat High Court has said that activities is no concern. If the trust is being registered and other documents are there, then you have to give certificate. And on the basis of that, they were issuing the certificate. But they were said that activities are must. Here they again say that notes on the activities of the applicant. So these are the documents that we have to attach along with our application 10A or 10AB. Now, Form 10A or 10AB, as the case may be, shall be furnished electronically. So now there is everything will be online, everything will be electronic. So here they specify that it is to be furnished electronically under digital signature if the return of income is required to furnish under digital signature. When at present also, when you are submitting your return of income of a trust, we have to submit return with a digital signature of any of the trustee. They say that is to be, new form is to be attached with the signature of the trustee, or though electronic verification code in a case not covered above. So you have to give your Aadhaar card number, trustee's Aadhaar card number, and they will get a OTP on that, and on the basis of that, you can apply. So that one should be careful. Form number 10A or 10AB shall be verified by the person who is authorized to verify the return of income under section 140. The moment we submit our 10A or 10AB, it will be verified by the officer as per section 140. And in the section 140, they say that when at present also we submit our return or anything, it will be verified by them, and whether it is to be passed an order or it is to be issued a notice, that they will decide. Again, on receipt of an application in Form 10A, the principal commissioner or the commissioner authorized by the board shall pass an order in writing granting approval under section 1023C1 or 2 in form number 10AC. So our certificate, once our application has been accepted, it will be issued in form number 10AC, and accordingly you can say my trust is registered and issue a 16-digit alphanumerical unique registration number, URN, that to the applicant. So you will get a certificate and unique registration number also you will get, and that is of a 16 number. Just now we can say we are getting a PAN number. How you will verify that this PAN number is pertaining to a trust or individual or HUF or a firm or a company? So the fourth letter, on the basis of fourth letter we can find if it is T, we can say it is of a trust. So accordingly here also they will give you a 16-digit alphanumerical unique registration number. If at any point of time our application has been accepted, they will issue the certificate. But if there are certain mistakes, then, so they say that if at any point of time it is noticed that form number 10A has not been properly filled in by not providing fully or partly or incorrect information or documents required to be provided or not complying with the requirements. Principal Commissioner or Commissioner, after giving an opportunity of being heard, please remember that under the Income Tax Act, they cannot do anything by themselves. If they want to change, if they want to do anything, first they will give us the notice. Today also we are getting an order that this is a provisional order. If you got any objection, you can write down them. So here also they say, before cancelling, before rejecting your application, they will issue a show-cause notice and then you have to apply. Now, in case of an application under section 1023(4), during previous year, beginning first day of April 2021, the provisional approval shall effective from assessment year beginning from 1st April 2022. Assessment year 2022. So it is 21-22. And in the case, an application made in form number 10AB under section 1023(1), form number 10AD, and in the case of approval is granted. So in 10A, they will issue certificate in 10AC, and for 10AB, they will issue certificate in form number 10AD. And the Principal Director General of Income Tax System or Director General of Income Tax System, as the case may be, shall lay down the form, data, structure standards, and procedure of furnishing and verifying form number 10A or 10AB, as the case may be, and be responsible for formulating and implementing appropriate security and restrictive policies in relation to the Act. So this is pertaining to renewal of section 1023C. Now we go to the second one, and that is majority applicable to we all, and that is 12AA. That is applicable to we all. And have you got any idea how many trusts are being registered in Gujarat with Charity Commissioner of Income Tax? Roughly, they said there was a figure, it may be around 160,000. And how many are submitting or doing audit? That is, there is no data with them. So this is the now we can renewal application for section 12A.
So if the trust is non-operating, then they will not register now.
Now they will not register. So formally there was a procedure that you have submitted and you have not done activity. So they were rejecting. Now the Gujarat government has said that for granting registration, activity is not important. Because I say I would like to do activities, but once I will get registration, then only I can say my trust is registered and I will get the donation. But so without activity, that was on the basis of Gujarat government, Gujarat High Court judgment. Now activity was not required, not mandatory. Now here they say in application for the registration of charitable and religious trusts, an application under 12A for registration of a charitable or a religious trust or institution shall be made in the following forms. Again, 10A and 10AB. 10A, in case of an application under sub-clause 1 or 6 of case clause AC of subsection 1 of section 12A. Now, 12A AC, what it says? 12A AC says, notwithstanding anything contained in clause A to AB, the person in receipt of the income has made an application in the prescribed form and manner in the Principal Commissioner or Commissioner for registration of the trust or institution. Now, 1, it will be applicable for form number 10A. where the trust or institution is registered under section 12A or 12AA, then they have to, within 3 months from the first day of April 2021. So majority of the trust, it has been registered either section 12A or 12AA. So all these religious or charitable trusts will have to make an application before 30th June. Even today also we have tried at about 4:30. 10A is not on the portal. So we said that if it is applicable, then let me go and we can show you that now it is being functioning. So till 3rd, it is not applicable because it has not been sent in. Now, so that is for 10A. Now, subsection 2, where the trust or institution is registered under section 12AB, that is a new section, 12AB, and the period of the said registration is due to expire at least 6 months prior to expiry of the said period. So here they said that if a person has been applied for 12AB, 12AB has been introduced last year, then in that case, 12AB is to be submit, 10AB is to be submit. Same way, within 6 months from the commencement of the activities, 10AB. The third one is, we can say, where the registration of the trust or institution has become inoperative during the first proviso, then you have to be applied in form number 10AB. And the last one is, in any other case, at least 1 month prior to the commencement of the previous year. Here I am not able to understand what they say. In any other case, at least 1 month prior to the commencement of the previous year, relevant to the assessment year from which the said registration is sought. So that means if I would like to apply from 1st April, I have to make an application 1 month before. So it is not clear, at least in my mind. If you can see that section 12A, 12AB, 12A, item 6. So I couldn't understand what they want to convey. So this is pertaining to 12A. Again, the same procedure. You have to certified copy of the instrument, certified copy of the self-certified copy of the registration with registrar. So these are requirements are same for all the 4 sections. So unnecessarily, I am not repeating it. And self-certified copy of 12A or 12AB. Now, where the applicant has been in existence during any year or years prior to the financial year in which the application is for registration is made, self-certified copies of the annual accounts relating to the last 3 years. So the same thing, they have repeated it. So form number 10A or 10B, similarly, it is to be submitted digital signature. Digital signature is not then electronic verifiable. 10A and 10B in the case maybe shall be verified by particular person under section 140. So rest of the things are there. On receipt of an application in form number 10A, the principal commissioner or commissioner authorized by the board shall issue 16 digital alphanumerical unique registration number. Same thing will be applicable to there. And if at any point of time it is noticed that form number 10A has not been duly filed or there are certain mistakes, then after giving an opportunity of being heard, they may reject your application. So we are not sure that once I'm registered under section 12A and 12AA, I will definitely get certificate under section 12AB. So you should be more careful while submitting this. And in the case of an application made in under 12A during previous year beginning 1st April 2021, the provisional registration shall be effective from the assessment year beginning from 1st April. So it will be 22-23 and 21-22. The next one is renewal application for section 35(1).
Appeal provision is always there. Appeal provision is there. And they will give the reason on what ground they have rejected it. Even at present also, if our 12A application has been rejected, we can prefer an appeal. We can definitely prefer an appeal. Now, renewal application for section 35(1). 5CA, Rule 5CA, it has been in intimation under 5th proviso to subsection 1 of section 35. Now, what is section 35? I think we know section 35. Yes or no? Correct? So, an intimation under the 5th proviso of section 35(1) by a research association, university, college, or other institution shall be made in form number 10A. Here there is no 10AB. For section 35, only form number 10A is to be submitted. The application under Rule 1 shall be accompanied by form number 10A. The same thing will be there. Here, registration certificate notified by granted under section 35. Like previous one, it is to be digital signature, and form number 10A shall be verified by person under section 140. On receipt of an application in form number 10A, the principal commissioner or commissioner authorized will issue a 16 digital alphanumerical unit registration number, and if at any point of time 10A has not been accepted or there is a mistake, then incorrect information, they may cancel your application by giving an application for opportunity of being heard. Then they will cancel it. So these are the same, so we are not repeating. And the last one is ATG5. This is most important. ATG5, what it says? That in the principal rules for Rule 11AA, the following rule shall be substituted. What is that? Then an application for approval under section ATG 56, the applicant shall be made in the following form, namely 10A and 10AB. Now the application under Rule 10A, Rule 1, shall be accompanied by form number 10A or 10AB. Same requirements are there, so I'm not repeating it. And lastly, here they say that 3 years accounts and everything, and not on activities of the applicant. In section 35, they didn't ask about this, but here they said not on activities of the applicant, because ATG is also there, and we know that there are many misuse of registration of section ATG. Majority of the persons, they say we'll give you a check and they will collect the cash. This is the frank reality I'm telling you, friend. So now form number 10 digitally and everything, it is to be signed. Now here one more thing is there. What is that? That you have to give a list of donation received by you in form number 10BD. And what is form number 10BD? In 10BD, they have said that you have to give these details. All the donations which you have received, whether you have received in cash or in kind or by check, the list you have to give them, and they will match it with your accounts and the list. This list, everything. And what is in detail? Atul Bhai will say in this 10BD what you have to submit. So here, but one should be careful. And one more thing is that you have to submit this, and if you are not able to provide this, then your ATG certificate may be cancelled. And they have given very details, but Atul Bhai will tell you what is to be there. So in ATG, you have to give the details of this. So friends, here I think that the amendment made in these 4 sections that I have tried to cover it. And now you have got any question? Yes, sir. So, which are pending for the approval. No, here, I can tell you. Which is pending till. I got the answer of that also. Just because I got the copy of that. Here they said that application pending before the principal commissioner or commissioner on which no order has been passed under clause B of subsection 1 of section 12AA before the due date which is sanctioned has come into force shall be deemed to be application made under section 6 of clause AC. So it will be considered as a deemed to be have been made, and it will be followed like this. Your application is there, then you need not submit again this. Correct? And they said the order under clause A, that is clause A, B, and this, it is to be submitted by the end of month in which 3 months, 6 months, and 1 month. They have given that time limit also. So you applied for application in March. So it is naturally pending today. So this will be considered and you need not submit a new application. Right? Fine. So really I am. Any question from friends who are on the please.
Is Form 10A to be filled 2 times for 12AA and 80G?
Yes. Answer is yes. For 80G, you have to submit form number 10A and.
Question repeat.
Sure. They said that form number 10A is to be submitted twice, once for 80G and once for 12AA. Correct? So it is to be submitted twice.
Sir, another question.
Yes.
What about application for no TDS certificate in Form 13C?
So no TDS certificate is a separate thing. Here we are talking about the re-registration. We are talking about re-registration. I have got certain question. Question number 1. Whether data of the donor who didn't want benefit under section 80G is required to upload through 10BD. I do not want the benefit of 80G.
But trust is under obligation.
So it is to be submitted. It is to be submitted. Again, a religious institution is not registered under section 80G. Whether it is required to file form 10BD, the answer is no. 10BD is only for the section 80G. Now, whether donation in kind needs to be reported under section 80G while filing form number 10BD. So it is there and Atul will deal with that.
So for which financial year it has to be, sir? For 2021 financial year?
Naturally, 2021.
Financial 2021 it has to be uploaded.
21-22.
It will come into force from
21-22.
2021
No, 21-22.
21-22 next year.
Next year. Again, where capital grant or government grant or CSR donation or membership fees to be considered as donation under any of the donation types that is specified grant or others. It has been mentioned in the form, so that will be verified. Again, whether office bearers in point number 9A, they said the name of the trustee Atul will take. So name of the office bearer is not required. Name of the trustees are required. For entities registered under section 80G, that question has already been come. 12AB and both, you have to apply both.
Yes, sir.
Yes,
Sir, there is 2 questions.
Yes.
What about application for no TDS certificate in Form 13C, but it will be under old registration certificate?
So here, regarding TDS, this will be applicable from next year. And whatever my friend asked me is about the current year's TDS. That is the 31st March 2021. So it has no concern with that.
Can we make an application for no TDS certificate before registration?
Yes, you can. Today you have got a certificate and you are applying for this.
Sir, another question.
Yes.
Trust has existing registration certificate under 80G5 and existing registration certificate under section 12AA is misplaced. Then shall affidavit be worked? If not,
No, there is a good question. So there is nothing mentioned in the section, but at least we can say, I can say that if a trustee can file his affidavit that this is a very old one, it is not available, our number is there, and on the basis of that affidavit, it will be survived.
so what documents to be submitted?
The copy of affidavit, register your registration number, that is to be attached, and rest of the thing, copy of trust deed and constitution, whatever it may be. Right? So really, friends, I am thankful to you all, and though in this time of a period you remain present, and persons who are virtually verifying this, again I am thankful to you. Thank you very much.
Mr. Sunil Sanghvi, Chairman and Secretary in absentia, my co-speaker Ajit bhai. I am very much thankful to the branch for giving me this opportunity to share my views on re-registration of Indian Income Tax Act. Two new forms are notified for application for registration or provisional registration or approval or provisional approval. One is stand A and second is stand AB. One form for order of registration or provisional registration, approval or provisional approval. One form is for rejection or cancellation of registration or approval. And one form is for uploading the particulars of donation received. And one form is for certificate of donation. The first form is Form 10AB, 10A. It is applicable for fund, trust, institution or university, hospital or medical institution having valid registration of or approval as on 31st March 2021 and for the first time seeking registration or approval. Now Form 10A.
Yes, sir. Sure.
Now, the Form 10A, the details required are in 5 heads or 6 heads. The first head is details of incorporation or constitutions, in which you are required to give PAN number of the trust. Then second is section code. The section code are 19 codes has been identified. You have to select from that 19 codes. The first one is 01. That is the existing trust having 12A or 12AA. And all other codes are given there. For ATG, it is 11 for existing ATG. And for fresh ATG application, it is code 12. So you have to select the code. So the question was asked whether we have to file multiple 10A form. Yes, because this is drop-down menu. You cannot select 2 codes at a time in a one form. So if you select code 01, ATG code 11 cannot be selected. So for re-registration of ATG, you have to file another form, give all the details, attach all the documents and submit it. The same time, if the trust is also registered under section 35, then you have to file third form. And then the codes are 13 to 19. So if a trust is registered under 12A or 12AA, if it is registered under ATG and also registered under 35, you are supposed to file 3 forms giving same details and same attachments. Now the third is nature of activity. Either it should be charitable, religious, or religious cum charitable. You have to tick mark that. The third one is type of constitution, whether it is a trust, it is a society, company, or others. The 4A is whether the applicant is established under any instrument. You have to tick whether it is established under an act instrument, yes or no. Then date of incorporation, registration or incorporation number. That means the charity commissioner registration number or company number or society number, you have to fill in. The authority granting the registration, either it is charity commissioner or a registered cooperative society or a registered companies act, ROC. The fifth one is object of the applicant. You have to specify which are the object of the applicant. Now the sixth one is whether the trust deed contains clause that the trust is irrevocable. In all the old trusts, there is no provision of containing this irrevocability. But under the BPT Act, all trusts in the Gujarat are registered under the Bombay Public Trust Act. And the Bombay Public Trust Act says that you cannot close your trust. Either you have to give your trust, or you have to give all the powers to the charity commissioner, or you have to merge your trust with the another trust having the same object. So, yeah, it is one way it is irrevocable. Then question number 7 is whether the applicant is registered on Darpan portal or under FCRA Act or any provision of Income Tax Act. So if you are registered under the FCRA Act, you have to tick yes. If you tick yes, then all the question 7A, 7B, 7C is required to be answered. That is relevant law or portal, registration number under FCNR Act, Darpan Act, date of registration, authority granting the registration, and all other question you have to answer. If you say no, you have not to give any other details. The question number 8 is whether the applicant for registration made by the applicant in past has been rejected. If you tick yes, then you have to attach the order rejecting the previous approval. The 9A is details of author or founder or settler or trustees or member of society, member of governing council, directors, shareholders holding 5% or more shareholding, office bearer as on date of applicant. So you have to give the name, address, unique identification number, ID codes, address, mobile number, email address. All these things is required to be submitted of all the trustees, authors, members of the society, member of the governing council, or directors. So it is very big lesson to us. We have to prepare all these details and then only we can file this. The 10th question is, has the return of income been filed for the last assessment year for which the due date has expired? Means 31st March 1920. Whether you have filed that return or not. If you have filed the return, the question that the point number 11 to 20 will not have to be answered. If you say it is you have not filed the return, then you have to give the details of all the assets and liabilities and income. The question the point number 11 is corpus, 12 is fund and reserve or surplus other than corpus, long-term liabilities, other liabilities, land and building, other fixed assets, investment deposits. And income. My question is, if you say the trust has not filed the return for the year 2021 assessment year, what will be the consequences of saying no to? And if you give details of income, your trust will not get the exemption under section 11 or 12, and all the income will be you are going to get a notice under section 148, and you will be liable to pay maximum marginal rate tax on all the income. So be careful while selecting no. The question number 21A relates to whether the fund or institution has incurred any expenditure on religious nature. If you have ticked that your trust is charitable, and if you say that you have incurred expenditure on religious expenses, you will be in soup. Question 21B is, if yes, provide the following details for 3 previous years immediately preceding the previous in which the application is made. So they are collecting all the data to give you a notice under section 148. The object of the trust, they have specified, you have to select from that: religious, relief of poor, education, medical relief, yoga, preservation of environment, prevention of monument or place or object of or artistic or historic interest, advancement of any other object or general public utility. You can select one or more object. it is also a drop-down menu, and you have to select which object that the trust is doing activity. Now the notes appended under the form says that where the applicant has been in existence during year or years prior to financial year in which the application for registration is made, self-certified copies of annual account of the trust or institution relating to such period of periods not exceeding 3 years in which the said application is made for which such account has been made up to be provided only if the answer to row number 10 is no. That means if you have not filed the income tax return, then and then only you are supposed to submit the certified copy of annual accounts. This is the contrary to rule. The says you are not supposed to submit the accounts if you have filed the income tax return. But the rule specifies that you are supposed to file accounts. So there is a contradiction in a form and in the rule. So we expect a clarification. The time limit to find form number 10A for existing, it is 30th June. For fresh, as already stated, for the first time registration, at least 1 month prior to commencement of previous year, relevant to assessment year for which the said registration or approval is sought. Here, there is a contradiction. Section 12A subclause 2. This is from the clause AC, and subclause 2 says where an application has been made on or after the first day of June 2007, the provision of section 11 and 12 shall apply in relation to the income of such trust or institution from the assessment year immediately following the financial year in which such application is made. That means if I make an application in month of April, my 11-12 will operate from the assessment year 21-22. However, the subclause 3 of 12A 1 AC says that if I want to get the registration under section 11 or 12 for financial year 21-22, I have to submit application 1 month before the financial year starts. That is February 21. If I file my form in February 21, then and then only I will get the registration for 21-22. So there is a contradiction in the same section. Section 1 AC says this, and subsection 2 says that you can have the registration if you are filing application during financial year. Even if I file my application in March 2021, I will be able to get the registration, able to get the exemption under section 11 and 12. This also requires to be clarified. Now form 10AB. This form is for registration or approval is due to expire, or provisional registration or approval as is due to expire. Means if you have already registered, this form will be effective after 5 years, because once you apply under in form 10A, registration will be for 5 years. So it will be operative for majority of us after 5 years. Huh? Now, it is relevant here. If you have registered, if you have already registered under 1023C, now it is mutually exclusive. Until now, both section you can get the 1023C registration and 12A registration. Now you cannot apply for both. Only one. Either you have to select 1023C or 12A. So if during 5 years, if you feel that now I have to switch over from one to other, you have to file form number 10AB in that case. Second, after getting the registration, if you modified the object of the trust, which do not conform to the condition of registration, you have to file form 10AB. The time limit for filing for this, to make 12AB operative in lieu of 1023 or vice versa, at least 6 months prior to commencement of the assessment year for which the said registration is sought. So before 6 months from the assessment, means before 6 months from the financial year, you have to choose whether you want to change from 1023C to 12AB. And for modification of object of the trust, after modification of object, within 30 days from the date of modification, you have to file form 10AB. If you do not file form 10AB, your registration is supposed to be cancelled. So be careful. Now we go to form Form 10BD, that is statement of particulars to be filed by reporting person under clause 8 of subsection 5 of section 80G and clause 1 to subsection 1A of section 35 of Income Tax Act. Means donation received by a public charitable trust which is eligible for 80G deductions. You have the requirement is you have to give PAN number of the trust, the reporting period means the financial year, then details of the donor and donations. Unique identification number of the donor means PAN number or Aadhaar number. The ID code. ID codes are whether it is a PAN or Aadhaar card. Then section code, whether it is 80G, whether it is 35.1, 12A, 35.12 or 35.13. Then name of the donor, address of the donor, donation type. Donation types are whether it is corpus, whether it is specific grant, whether it is other than above. And the mode of receipt you have to mention. That is whether it is in cash, whether it is in kind, whether it is electronic mode including account pay check or others. And the amount of donation in Indian rupee. you're not to mention it. This is only for giving the details of donation which is eligible to get the deduction under section 80G. Fine. If you do not have the PAN number or Aadhaar number,
that is asking. PAN number or Aadhaar number. Donor may not disclose PAN. He may have PAN, but he may not disclose.
Then 80G file is not going to that.
It does not want 80G.
Then you may not mention in this form.
We can keep blank.
You can keep blank. Now, there are in the rule what they say that the reporting person referred to in subclause 2 shall, while aggregating the amount for determining the sum received for reporting in respect of any person. For every person, you have to aggregate the donation given during the year. If I have given donation for 10 times, I have to aggregate that and I have to report. Not for 10 times. Take into account all the donation of the same nature paid by that person during the financial year. And if the donation has been given in 2 names, then proportionately attribute the value of donation or aggregate value of all the donation to all the person in case where the donation is recorded in the name of more than one person and where no proportion is specified by the donor, then attribute equally to all donors. This form is required to be submitted before 31st of May of after the financial year. Means the first time you have to file this form by 31st May 2022. And the donee trust has to give a certificate of donation in form number 10AB, in which you are supposed to give the PAN number of the reporting person, name of the reporting person, address of the reporting person, name of the donor, address of the donor, amount of donation received, financial year in which the donation was received, whether it is for corpus or specific grant for or others, and section under which the donation is eligible for deduction, whether it is for 80G5 or 35(1) or 35(1)(2)A or 35(3). And it is required to be given before 31st of May. We can take a clue from here that the form 10BD is required to be submitted only for the donation which are eligible under these 4 heads. Other than that, if someone is not want the deduction under section 80G5, you may not give his detail here. Or if he has not submitted a PAN number, you may not give the details in form 10AD. So I have completed my yes. Yes. This is the procedure that they want to follow. Either it may be auto-populated in your return. If it is not auto-populated or it is not shown in 26 years, but the data is with them, so they can very well cross-check the donation, whether actually the donation is given to that trust or not, by processing the return. It has been come to notice of in many cases, the SSCs are just giving the name, PAN number and donation given. Last year copy. Without giving the donation. So now they want to cross-check that and give the actual deduction. Thank you for the patient hearing.
There was a question in virtual. Irrevocable customer dissolution to clause, whether it will be treated irrevocable?
No.
Sir, it will be a question. Repeat करेंगे आंसर आपको करते हैं. Sir, what do the clause of irrevocability if the trust contain dissolution clause? Whether it would be treated as a revocable or irrevocable?
If the trust deed contains the dissolution clause, then it is not irrevocable. It will be treated as a revocable, and all the consequences of that will follow.
Then, what to select in row number 6 when there is no trust deed? Trust was created by will.
Then you have to submit a copy of the will. You have to tick other than trust deed. And you have to submit a copy of the will.
We applied for 12 AB in August 20 for new section, but was later rejected, stating that apply after 1/4/21.
Yeah.
Will this be considered as a rejected 12 AB?
No. The section was not operative at that point of time.
The rejection
it cannot be treated as a rejection.
What would be the position in case of trust applying before 31st March 21 and approval is yet not given by deputy exemption?
It will be treated as application made under section 10 in form 10A and will be processed accordingly.
Can you explain point number 20 form 10A that was related to MMR?
Form number 10A
point number 20.
Yes, point number 20 is income received in the previous year immediately preceding the previous year in which the application is made. This detail is required to be given only in case where you have not filed the return of income of the previous year. That means 31st March 1920. If you have not filed the return of income, then you have to give all these details. And they will issue 148 notices. You are supposed to file the return of income. You have not filed, your income is liable. And if you have not filed the return of income before the due date, then section 1112 will not apply to the trust. So all the income except the donation, because donation is exempt under section 56 to 10. So all other income other than all the income other than donation will be liable to be taxed at MMR. You will not be able to get any reduction whatsoever. If you are liable to file return of income, then and then only. Otherwise, if you have not filed, if your income is below taxable limit, then you have to say no and give the details of all the assets, liabilities, and income. If you file form 10A for fresh registration, it will, the department will issue a provisional registration for 3 years. Then after you commence your activity or before 6 months of the expiry of the 3 years, you have to file once again for registration. And then they will give you permanent registration for 5 years.
It will be considered provisional registration.
It will be considered as a provisional registration. If you have not commenced your activity, then you will get a provisional registration, and then you have to file form 1080 and get the registration. Thank you.
Thank you very much, Ajit Bhai and Atul Bhai. On behalf of Ahmedabad branch of WIRC of ICAI, we are thankful for both the faculties for the detailed analysis of the re-registration and the new registration of the trust. With the deadline, we know it is the 30th June 21. As per our nature, we should not wait up to the deadline and should not seek for actions and later on that. And now the forms for ITR also they are notified for the assessment year 21-22. So it seems that government is not in mood for any extension for this now year, and the 30th June would be for this, 31st July and the 31st October for the audit returns. Thank you very much, sir, and we would like to see you again in our platform, and thanks for sparing the time. Thank you participants for joining physically and virtually. Thank you very much.